All right, here we go. Lovely. Lovely mess here. Ooh. Hmm. Okay. Mm-hmm. 2314. What you doing, GME? 2292. Maybe, maybe that's not too far off. We could probably be fine. Maybe that one there. Okay. So, $207. Going for the gap. Yeah, well, you know, opinions. Opinions. Yeah, that's always nice to see straight up. I forgot what this was about. Nothing. Oh, clean up it again. I don't know about that. Guess we'll see. Kind of looks like it's pooping out here a little bit. I'll leave that one on there. I mean, really, there's no precedence right now. So, good morning. Good morning, good morning, good morning. How's it going, everybody? I'm mumbling, looking at the charts. Getting ready for another day. Day in the life. Probably could get through another iteration today. Maybe very boring. I hope it's not. I hope today is a good day. Yeah, I mean, I'm not looking at SPY right this second, but IWM looks like it's going back to 207 maybe, which makes sense. I mean, it hasn't checked it. It would be odd to me to just keep rocketing, but let's see here. I don't know. I think it could be safe. It's not really made a new high yet. So it's not, I don't think it's pushed resistance on the top. which doesn't, I mean, it doesn't mean it won't go down right now. It's just not really, market hasn't really tried to advance just yet. So, and then this is another one that I kind of reset my charts a little bit. So let me make sure I got this one right. I need to know where that is. It won't take but a second. I think that's wrong. I think I got the wrong one. I think if I remember right, it should be tilted more. I think it's like here. It should go through that COVID though. Like there. That's the one. There we go. That's the one. Yeah, I mean, we've got quite a bit of space for any kind of a necessary range or retracement here. There's not really any reason why you couldn't go there. It's a different chart. It's a newer chart, so it doesn't have all my other marks on it. But good morning. Lisa popped. Yeah, you know, I'll talk about AMC, I guess, in a minute once it gets going. Just kind of seeing what the market on the whole is doing. So that was that big pullback because of all the fear. To me, SPY looks a lot more at risk of topping than IWM does, but I think that part of that's because of the volume dropping off pretty drastically here, which plenty of other people have pointed that out. It's not like anything new. It is higher volume than we've had to some degree on previous runs. I mean, you could argue that it's topping off because of the lack of volume. But if you think about it, this is the buy-in. This pushed us from that big retracement down, that breakout, all the way back to it's pretty straightforward in that regard. If I were to use I'll use a triangle. Market's open. Let's see what AMC does kind of as a knee-jerk reaction this morning. Let's see. Silly way to go about it, but that's okay. Yeah, I mean, I don't feel like on the whole it's that complex. If you go from the breakout to, which is basically here where it left, to this top, that is where most of your volume is. So it's odd to me to be maybe a little over speculative about volume right now. I understand it's dropped off quite a bit. Goes through here. But dropped off quite a bit in these last days for sure. But just kind of like anything else, it's like you look at the grand scheme of things, kind of erase the outliers. You just take a look at what the overall market has looked like for the past, 4 or 5 years. Yeah, I mean, this is still like above average volume. I know it might be a little hard to tell because my screen's all stretched. We've really only had super high volume on these big pullbacks. And then this rally recently. It's a huge rally. That's more volume than we've had in the S&P in a long time. So it's a little odd to me to, I mean, it's lower, that's for sure, than it was. Let's check weekly. But it's not like low, Comparing it to like everything else that's come before it, we're talking about like this really recent period right here. No, it's pretty average. It's pretty average weekly volume. Maybe slightly below average. But then, like, this was slightly above average. So it's a tough one because really going backwards, it looks a lot more like volume from over here. We've got the same amount of volume right now per week. I mean, it's not like this area. Obviously, this is very, very high volume buying. But again, this is like breaking out of that low here and then rising up. So, I don't know, kind of a mixed bag. Parts of it on the daily looks fine. And then when you go to the weekly, it looks pretty low. Like pretty darn low. So, all right, let's talk about AMC a bit, and then we'll look at GME, which GME dropped 23.10, which is fine. I don't really think that was unexpected. It just kind of, there's a lot of possibilities for how low it could go. I preferred it to hold here for sure, but it really could come down to this early stopping point, which was at 22s. That's really back where the creek is, and so if it's doing a backup, it would make sense to just kind of head and shoulder maybe down to 22.30 or something. And I said, maybe 21.96 if it came down later. So GME, there's not much for me to say beyond that right now. I'm just kind of waiting it out, see what happens. I think it jumped the creek, pushed resistance up a little bit. So when it did that, now it's at like 22.30. Hang on a second. I think IWM could easily see 207 again. It's been in a trend, and it just broke out of that trend with the hook type action right here at the end. This guy, and now it's in retracement mode. There's in my opinion, it's a pretty significant wraparound figure here. We did wrap around the same number earlier, and so it's, to me, it's not really a question of like, could it be wrapping this like this midline here? Nah, I don't think that's much of a question for me. I think it definitely could be, because this has been used as like an anchor for a little while for this whole structure really coming up here. So it's been wrapping around this pretty steadily. This is basically where the trend is. So until it kind of bounces off that trend and moves forward, it's going to be acting like as a support and resistance marker. So we dump beneath it. So for me, it's like, well, all right, what does that mean? I think going from just kind of middle here, that marker, higher marker to the lower, it definitely looks like a 207 is possible. And we had talked about coming back down to 207, maybe ironically for a little while. I would say ironically because it just wasn't happening. And on my chart, I had it kind of coming down here, breaking out here, and then doing this stuff that we just saw basically. And instead, what we got was, we basically just got the breakout and the move. We didn't get the retest on 207. So for what it's worth, I don't think it's out of the question. I don't want to be jumping the gun just yet. But my thought is that that's pretty reasonable. And I'm willing to speculate on retracement levels being near there. You got one at 205, which is like a 618, and you got another one at 209. So getting that gap at 207 or slightly lower down to about 206 on IWM would not be way out there retracements. I mean, it's a pretty basic retracement. And considering that we're kind of wrapping our finger around this particular ascending line in terms of like a waveform, I think it's important to note that that's reasonable, and that probably what happens in the end is that this comes down at some point, comes back up and hits this and then takes off. It may even look a little like a wedge at this point because of the way this is set up, like so. That this has become like a creek resistance right here is probably not an accident. So I would be waiting to see what happens with that. But right now, it definitely seems very possible that this could come down really low. And then my expectation is if it can hit that marker, I hate to say it like does the same thing again, but it kind of looks like you might need to, I would prefer they walk out a little slower, like that you have a back up here in the middle, because we haven't had that yet. We talked about how there's been no checks on any of these levels back here. There should be one at like 209.90, and there haven't been any, except for these weird open gap spots. That's just my preference for more of a linear, I don't know, straightforward approach. You would just kind of go down here and then come right back up. But yeah, this makes sense to me. This 16th is here. I mean, yeah, so you could do this all and position yourself back at 216 on rate cut day pretty easily. It may even make more sense to do that and just prepare for that break and then break out and go ahead and finish the rest of this S curve. When we look at this on the big picture for IWM, which is the Russell 2000, and the moves here on these kind of smaller S curves are really last minute. We took a lot of time down low and then popped really fast at the end. This one, I've been talking about it for a little while, and aside from like some trajectories, there's not really been a whole lot that we could go off of in terms of timing. I mean, you have where you perceive a middle to be, but then beyond that, it's kind of whatever. And this is the trajectory. I mean, I know we talked about this before, but if you look at the intro trajectory and the outro trajectory on an S curve, a lot of times they're similar. They don't have to be exactly the same, but a lot of times they're really similar. This one could not be, I mean, in some ways it could not be better. I mean, it's super, super, super tight. Mechanically, it's just basically perfect. This is essentially the same line. You look at the high down to the low here. It's at the end of that. I mean, it's exactly the same. So for now, it seems to be following really closely. And then it begs the question, why is my S-curve not finished here? Yeah, I don't know. I did this twice. The first time I did it, it became, like I had it going to 252. But the middle, I think, was a little higher up. when I did it the second time, I rebuilt it, and it seemed to me that this middle should be lower, like it should be here around 200. So kind of a mixed bag, because one of a couple things is possible, I guess. Either the target is actually a little bit higher and out farther, or it's like a little lower. It's really tough to tell for me. I think that I thought 200 was like a natural place, but I think when I did the first time, I actually had it higher because it was at 252. Now it's down to like 251. So I don't know. It's tough. I guess what else I could do is I could draw out that might be a better idea, is I could draw out from this point to this point if I think that that's really like the beginning and the end of the trajectories, and that should give me a better center. Here. Actually, that does look better. That's where the hook is right there. It's hard to see it because you guys are looking at it probably on a smaller screen, but there's a hook there. So it could be that when I doodled it, I did it really high up, and it could be that I just didn't kind of look at that perfectly. So yeah, I'd say it's really close. And actually it's really close to being 50% too at 200, so. We're at 467, that's good. Kind of move back up above. That's good. That's a good sign, at least first thing. I'm not really worried about it just yet. GME is back over 2310, same deal. That's good, first thing. Let's see where this goes. Well, that one never came back all the way down. That's right. So this is higher. So I think this is what I did the first time. I must have done this a couple different ways. And then that becomes, again, higher still. That probably is the exact same thing. I'm basically just recreating the same chart at this point. That makes sense, and that's where we stopped. So that's pretty darn close. Pretty darn close. So let's see here. Yep. So if that's the case, really there's no precedence to get there until like October 3rd. Like mean Girls. We were talking about that the other day. That's really funny. Isn't it October 3rd? Isn't that the date? Oh, man. Yeah, it's like 250 on October 3rd. I don't know, man. This is a tough one. It's like never quite perfect. Maybe that trajectory is not the right thing to use. It might be a little earlier than that. You guys are like, make up your mind, Booksy. Well, when you build these things, it's like you kind of go from one thing to the next, and you know, if I use like the intersection, it's over here. If I don't, if I use the middle, it's on October 1st. So it's like, who really cares? Nobody really cares that much, but it could, I guess, affect some things. In this case, there's no real difference because it's the same week. So it'd be that week that includes those dates. And that's that. So if I were going to be using any kind of a measurement tool, I'd probably like use this one down here, which goes from peak to bottom. But I don't know. I think it works pretty well and it looks good. So I don't know if I really care that much if it's not like perfect. The idea there is simple enough, which is that you would come back, maybe test this low here. It's basically like a weird wedge action that's wrapping upward, and then you would push out above this marker. So in theory, there's not really any super strong reason to buy this. It looks like a head and shoulder too, doesn't it? Shoulder, head. It's interesting. I don't know how you would reconcile that though. There'd be like a really long uptrend. Yeah, I don't want to go into that. That doesn't seem like the best use of time. I feel like that's going to be a dead end. So anywho, yeah, this is basically the structure here. So you can see that the S-curve set up on this pink line that's ascending, and it had been wrapping during the SOS phase right back here. It had been wrapping around, and then we got into like an SOS back up here. Did the same thing. It's been wrapping around that. So that's why I'm not too like thrown off if it came down low at this point, because if it's wrapping around that, it could definitely swing back down. I think it's going to just depend on stopping power at that point. So I think 207.50 is definitely reasonable for IWM if it continues to slide. It's just a whip. So, I mean, it doesn't have to go that low. If the buyers step in, it could be that it's stronger than expected. That's what I was saying. Like, just in terms of like the 50-50, it could come down to that point and then head back up. But anything like less than that, going a little bit, let's say, higher or whatever, and not coming down as low, wouldn't be bad. It would just be different. And then we've got FOMC on the 18th, which is right where my mouse is. So I'm going to drop that value here. So you could see how this whole thing is definitely going to play into, potentially play into this. We already know that I think he's going to cut rates. He basically said the time has come for policy change or something. I don't remember what he said, but it would make no sense if he didn't do it. So I do expect there to be a catalyst event there. Honestly, it looks really good so far. I don't see anything majorly wrong with it. I think this is just a natural pullback after kind of exhausting a move up. 470 moving on up on AMC, not bad. Not bad. Head, shoulder, knees, and toes. So when I look at the picture here yesterday, it's a mixed bag. So yesterday, let's recap really quick. Nothing too crazy, just a light recap. I talked about this as a potential bottom, how it has some of the markings of a classic Wyckoff bottom, which is good because most of our springs are like very compressed versions of that. Usually there's a more typical like big 1, 2, 3, 4 swing that chops more sideways. This one was a little more regulated, a little softer, but it's there. It's an auto reaction top, and then it rejects again and it heads low. And I think this is the bottom. It did form like another breakdown area, which is kind of confusing. So this is where things get dicey for me because I watched it yesterday after close and I thought, well, it's kind of doing what it should be doing here. Like it jumped the creek locally right here, this little guy. You can see that. It hopped down that steepest one. It made a lower low. Again, kind of looks like it doing what it should be doing, kind of. It kind of makes a little spring action. This was even divergent too. Right here, like you can see it's pushing up on RSI, and then it has this like false breakout and it comes and retraces all the way back down on RSI, and this is on the 6-minute time frame, so it's not the highest time frame. So what was curious about this to me was that you basically had a false advance again. So this happens sometimes and there's not really much you can do except just kind of watch and be careful. But right here, it's pretty minor. Let me see if I can get the, like it's not a huge deal. It wouldn't, if you weren't looking for it, you might have not even seen it because it's just super straightforward, like basic. It's right there. And I don't think it ever really jumped like intensely. I think on like the 1 minute it went over by like a fraction. It's so minor that it just wouldn't even have registered to me that that was happening until it happened. So basically it tried to advance here. It rejected 1, 2, 3 times at 472. We already knew that 472 was going to be a pretty critical level. That's the level that this thing came down to. It was like 471. And we talked about 474, 473 yesterday. Basically, it just walked it down and then broke down here, and it slid really low. The good news was that it finally rug pulled, and when it rug pulled, it went for that initial target that we had yesterday. So when I pulled up the chart yesterday, we did the trends down. It seemed to me that they were pointing towards a little bit earlier in the day, but they were pointing towards 465. So the only thing I can say about that is that sometimes, that target doesn't just disappear. It may seem like it did because you passed it, but sometimes it doesn't just disappear. It's still there. It's still like there's a reason for it. Usually there's some kind of a liquidity reason that the market on the whole is aiming that direction. So that liquidity doesn't just the reasoning behind it doesn't just disappear. So the fact that it dropped down real low and hit below 465, not at all shocking to me. And I said on the record yesterday several times that I felt that there really wasn't a greater reason to go low. Like there's not a greater shelf below 465. So there's a lot of things that can be said about this. It's another test on this kind of outer jump. So if you look at this as a cross earlier, 1, 2, you can see that we've tested it and then we came way back down and tested it again. There's also a reason to think that it's a double test on a creek that we've already jumped over. It wasn't like anything that we hadn't already done, but this is another back test on that. So this was the one that we leapt over pretty early on in August on the 13th. So it's been a bit of a slide down. At this point, definitely like a wedging kind of formation here. So yesterday we had talked about the possibility that, hey, this could be it. But in order for this to be it, this would have to be like a spring action. So basically you'd have to come out of here, find support, and then break out of this yellow line that you see coming down, which is a more important trend at this point. It is a creek, but I mean, it's also just a trend, I think, on the top of this potential wedge. The other possibility is that we iterate again, and you basically see like the same thing we just saw. Also seems very possible to me, and that would be as simple as just kind of bouncing here back down. So that becomes an auto reaction, and you head back up again. You might push a little higher, above 475, maybe, and then you would basically come back and coast back down again. And that's where you could potentially see like the 450s. At that point, it's hard to make any kind of argument that this goes anywhere, right? I mean, it'd be way easier for us to sit here and say, look, Booksy, if it goes down to 450s, we're just going to stay at 450s because it doesn't make sense. We could have another bigger reaction here, but even if you try to advance before Monday, it's a really small window. It would be super easy to just do it again, and just come back down again. Sure. There's nothing in my mind that said we couldn't do that yesterday. So if you're wondering like if that's possible, yeah, it's possible. And we mentioned yesterday the possibility of kind of chopping back downward and just kind of continuing the pattern as it is to try to push to lows. Everybody's got targets that they're thinking about. Everybody's thinking about certain targets. There's another bottom down here like 454, around 454, 457. 457 makes a little bit of sense to me because of where we were back in June. And just again, if we're testing levels, that was one that never really got checked. We kind of passed through it, never really back tested it. So again, if you have a spring potential, where would it go? My opinion was 467. Like I don't think that there's a better bottom here. That some of that came because of the PNF, but that has always been a pretty important low area. You can see previously it's been checked many times. Again, 457 potentially. So if we're looking at where's the liquidity shelf, I think it's at 460 something, maybe 465 to 470, that area. So I'm going to be saying like 467 a lot, or 465. I mean that general area, okay? And then below that is a lot less liquidity exploration. You can see it on the chart in the VRVP, the visible range. You can see that there's very little exploration below 468 down to like 450, and then even less so below 450. But the reason for that is actually very simple, and that's because, and I made a case for this yesterday. I spent about an hour at the beginning of the day talking about liquidity here, and I made a case about how that really makes sense because in the grand scheme of things, this was a previous range. Like, it's already been traded. So I don't connect these two just because they're in a similar region. Not yet. I think that the range we traveled below, so this is part of the recap, really goes from about that 465 area down to 4. I mean, essentially. And that's pretty much where we spent most of our time back in February, March of this year. And so to look at that and then look at where we are now, it's pretty easy to see like that's really where the shelf is. And it doesn't make a lot of sense from that vantage point when you're looking at something like that. It doesn't really make a lot of sense then to sort of question where the range is. It kind of looks obvious. We've been building up on top of this. And then specifically all those big like downward thrust movements, a lot of them have been around 485, and that's where the tops are over here. So looking backwards, there's this kind of narrative, I suppose you could say, that some folks have, that it's going to need to come really, really low. And I made a case yesterday as best I could that I never say things are not possible. That would be really irresponsible. And it's not just to save my butt. I just legitimately think, well, it's always possible, that something could be different than you expect, or there could be a different aim in mind. And that's just you not being full of it and just marrying all your ideas. I mean, sometimes your ideas are really right, and sometimes they're like mostly right, and you get something a little bit wrong, and it's like, oh, it changes a lot, But I would say that 430 area, the one that we checked, double tested earlier, although that is a candidate, that's about 50% of this range previous. So normally in a spring-like action, you can see back here, I've kind of marked it off. Normally in a spring-like action, you don't want to drop below 50% into the previous area, because if your range sets up like right on top of the next, it's typical, though not always the case, that's some kind of a percentage value of the current range anyways, and you can't drop indefinitely on a spring. Like, it has to maintain a distance from the original range is dropping from in order to maintain that kind of spring status. Otherwise, it's just selling off, right? Everything could be a spring. That's not true. So there are some mild rules out there about maybe how far you could go. And my rule of thumb is typically just the most simple one, which is I don't want to move another 50% lower into the next range. So you can see on my chart right now that the way I have it set up, let me see if I can fix this a little bit to make it a little bit clearer, is that basically you don't want to drop below 430 again, because that would be, again, potentially. I mean, I'm not going to sit here and pretend like it's foolproof. There could be some things that are wrong, and people are more than welcome to punch holes in it if you want to punch holes in it. That's your right, and I think it's important. But I think that on the whole, like, that's the main, like, summary, right? It's like once you get below 430, you're basically now in the previous range. Like, you've dipped below the 50% of that previous range. It doesn't really make sense to me that we would continue to go lower, or excuse me, that we would go down there and then not continue to go lower. So I get where folks maybe are thinking that's a liquidity need because we didn't trade a lot down here in the 4s and 3s. But that's like it's like saying basically you're going to come back and retrade this area. And I've heard people say that. That's not new. I have a couple people in my Discord that thought that, I know one guy in particular thought that we were going to come down and trade this region now. So, when you look at those things, it's easy to kind of see why that would be the case, and how that could go about. So yeah, I don't disagree. I think this is a very likely possibility if we were to slide below 430. Because at that point, you're like, well, why not? You're down there. You could just build a range here, drop down and get that gap, so on and so forth. So for someone to say like, hey, I think this is what we're going to do, and we're going to do this for another few months, I think it's very reasonable. That doesn't mean I necessarily think it's going to happen, but I think it's a very reasonable approach to charting. Is just looking at liquidity shelves and like where are those levels at. And yeah, totally get it. So I don't think that that's way out of the realm of possibility here. Some of you guys are like, that looks miserable. Well, I'm not in control of the stock. I don't get to decide what happens. So what I'm looking for is certain criteria. And you call that criteria confirmation because it tells you the direction of the stock. So confirmation down for me is a little simpler because it's like, it's too low. It's easy. Confirmation high is a little bit more complex because we're talking about a complex action. We're talking about a spring. And so in order to get a spring-like action locally, you'd have to jump this creek local, okay? Which means that as the crow flies, if we went straight up, it'd be at like 482 right now. But ultimately, there's a much larger creek, which is considerably higher. And that one's sitting up here, again, as the crow flies at like 490. And so I talked about you really need to get above 491, and then ultimately you'd have to get back above 520s. I mean, it sounds silly because we've already talked about 520s a lot, and you may think, well, so we already did that, we failed. Yeah, we did, but that was a key level, to break. It wasn't like an optional thing. So it still exists. I mean, it's still there. Just because we rejected off of it last time, frankly, all it means is that we now have a more firm outer creek because both of those up thrusts, the one on July 22nd and then the one that we had on the 26th, both of those were to the same point on that creek. They're the same extension beyond. This one traded above it more, which is a good sign, but then it failed at 503, as we all know. So the whole point of doing any kind of a spring would be to jump those creeks. And if you don't jump those creeks, you're not going anywhere. So there's really no point in wondering, because it's like, well, so basically it could be a sideways action at first. There's no rule that says this has to be super fast necessarily, but you'd have to have some kind of an exit action here across, and then you basically have to leap these creeks and leap the one above. Now you might be thinking this seems like a really tall order because now we got to jump like, I don't know, 1, 2, 3, 4 resistances. Yeah. Yep. But bears have the same kind of problem here. It's not like one-sided, right? And there's a fella in our Discord group who's very one-sided. He's always like, if it's not bullish, then it must be bearish. That's not really true here. We've had really bad IV, no volatility. We've had basically sideways action for 3 months. There's not really been a huge amount of benefit to bears here either. Bears are doing exactly what bulls are doing. They're accumulating because they think it's going to go that particular direction. That's it. But in terms of like calls and puts, nobody's really winning here. Like, and even if you were playing covered calls with IV as low as it's been, there's really not been much change in some of those values. It's been very like weak. So I'm trying to say it's a very bad chart. It pretty much only benefits people that buy and sell shares at this point, and not a lot of people are doing that, in our community. they may be buying, but they're probably not selling, you know what I mean? Um, so there's very few people that like short this that I know of that aren't institutions. And I'm not talking about puts. It's not the same thing. You're like, yeah, it is. Well, yes and no. Because you can buy a put and then resell it, and technically you haven't exercised it. You really don't directly affect the stock price. You will affect potentially sentiment and other things like max pain cumulatively, things like that. And then hedging, which is obviously what your market maker is doing. So you can affect the price. It's not the same as like opening a short position, which immediately sells the stock down. It's not the same thing. So what is the tall order then, Booksy? How do we get up there? I mean, it's really straightforward. Again, I know it seems complicated. I'm looking at that 496 area as kind of my first big tell. I don't think there's much else that needs to be met criteria-wise in the beginning. I've got all kinds of crazy alerts here, but the most important ones to me, obviously 5 is a big deal. That's kind of where we drop from. That would be a big confirmation to come back above and hold 5. But first, I'm just kind of looking at this at First Creek, and when we jumped over it back in August on the 23rd, that was the first time we traded above it for a while. And so the good news is we did trade above it, and that's good. Bad news is it was a distributive action, and so the next time we jump it, we need to hold it as a support. That's kind of the big one for me. Everything else today is going to be secondary. So I don't want to go through like Wyckoff all over again and talk about what that bottom should look like and exactly this or that. In this case, it's very simple. It's a tight wedge. Once it starts advancing, we should know it. There's not that much space here. We're talking about pennies away at this point again. And if we don't start advancing today, unfortunately, like a lot of our weeks lately, it means that you may end up kind of just chopping here till basically Friday or Monday because there's not that much time. It's a short week. So you have to make the right moves. Yesterday I said I was really like bullish Wednesdays. I do, because a bullish Wednesday can lead into a good Thursday, Friday situation. If Wednesday lately, I feel like it's been pretty much the same every week where we get like most of our volumes on a Monday, maybe a Tuesday, and then we get nothing like the rest of the week. It's been pretty dead. And so I would be really excited to see a bullish Wednesday today. I'd be really into that. I think that it could be a very positive sign that we end up at a higher place and breaking out even by the end of the week, which is good. So I've got this kind of mapped out on my chart right now on AMC in a very, let's call it an accordion. You know, accordion compresses and it stretches. This is very like outward stretched. It's probable that this is what happens because of trajectories, but this basically just implies that you're not going anywhere until either rate cuts or shortly before. And again, it's a very loose kind of interpretation. Rate cuts are over here on the, and we don't even know if they're going to be like actually on that day. They may just announce them and give us a date, you know, and say, oh, they're going to be in like 2 weeks or something, you know what I mean? So this implies that you wouldn't necessarily go anywhere until then. And so I've got it kind of stretched out. But also, this is just an idea to give me a sense of like where those levels are so that it stays on the chart and there's a visual. I do this quite often, and quite often it's wrong. And that's important because I know it's wrong. But I do it because I'm showing like this is the general pattern that I would need to see. Like these are the levels that it needs to hit. It just helps to visualize it better so you can see what I'm looking for. But timing often is like way off. So we talked about May and we did the comparisons to the current May breakout, and it's very fast. May is super, super fast. And so there's another version of this that almost doesn't make sense. It's just like blinding speed. And that's this guy where you basically just pump up to the top, come back down and check the creek at 5, and then you take off. So you basically go to an SOS at 560, come back down to 5, and then you just take off. That totally could happen. That's basically what happened in May. It just skipped all this in-between stuff, went to the most extreme spots, and then it left. It did these little tiny checks here and there, but most of it was spent running. Most of the time was just spent running hard. So that's a different situation altogether. It definitely puts it in a different light because it gives you a sense of like urgency, I guess. And also the fact that if it started running that fast, there might be a higher speculation of like, where are we when we get to the rate cuts? And I had originally thought, and I guess to some degree, I still think that door is open. We're really on the precipice right now. We're right at the doorway. We could take it. I thought we may prop up before then, before the rate cuts. Some people don't agree with that, and that's okay. I'm not in control of the price action. And frankly, at this point, I might just be like the boy who cried run or the boy who cried bottom, right? So like, if you don't know what I'm talking about the boy who cried wolf, right? There's a sense in which like every time we've kind of pushed lately, especially the last 3 times, this would be the third, I think. This one right here, right here, sorry, on the August 16th, and then this one on August 26th. Both of those were potential break points, and I think that's where things have been kind of frustrating because it's like, well, it could have broken there, but it didn't. Instead, it goes low. Could have broken there, but it didn't. Instead, it goes low, and it seems like you're just like wildly off all the time. So like, why are you even bothering? Doing this kind of guesswork. And all I can say is this, and it's not an excuse. It really is, in my opinion, just a reason. The way that I see this is that these are wave tops most of the time, these cat ear things. They're not always wave tops, though, and it's confusing because we get really accustomed to them being like the top of a wave. So they by default, they almost always kind of in my brain, they're like, okay, this could be distributive. That's always what I'm thinking. But there's a weird motion right at the end here, and if this breaks out high at the end, it ends up being basically like what we saw in January to June of 2021. And this happens, and it does happen quite a bit on moves up. The reason we're not questioning it when it happens on moves up is because it's moving up. So you're already like in this mindset that it's going up. You're not even really looking at it as a cat ear anymore. You kind of see it as something else. It doesn't look like a cat ear. But I know where it comes in the sequence of things, and it's always like at this last bit. And if it fails to advance, then it heads low. And it's either a breakdown or it's a spring, and you can make up your mind about that based on the overall setup. So in the big picture, this is a cat ear at the end of a sequence right here. You see that? And so you got an M cross, you've got a 1, 2, 3, 4, 1, 2, and then there's a middle cross here, jump 3, and then this is 4. And when you get to 4, it's like very possible this could have just advanced. And then you would have been in like an SOS almost immediately, And it seems backwards. It seems like a flip, but it has to do with that final action and the volume and all that stuff. And you can see it happening. Like, it's not a mystery. It may seem like a mystery, but it's not a mystery. You can watch it and see it happen, and you can tell like it's going to distribute. Because typically what happens is you get an upthrust, and there's a particular place in that wave. It's in the middle of this little tiny M that it jumps. And if it doesn't jump, you're in trouble, right? You're probably going to go low. And then you usually see the upthrust. It pokes its head above the creek, and then it drops. It's almost always exactly the same. So the same thing happened on the big picture right here, as you can tell. We got another jump here, and it poked its head above the next layered creek, right? And this is where things get kind of confusing. And you're like, well, what if that just kept happening? We talked about that. It's not a fun situation to be in. It could totally keep happening, and I don't want it to. But someone had asked me as well in the Discord group, what do you think about it just going sideways for several more months? I said, I don't really think it makes a lot of sense based on liquidity because I don't know why you would continue to trade here. But could it happen? Is there like a technical way that could happen? Absolutely. Absolutely. Because in a lot of ways, this is a big cat ear right here, right? And we've failed to advance. But there's always like a bigger fish, right? That's kind of the the Star Wars lore. There's always a bigger fish, as Qui-Gon says. So, and it's true. Like, there's always a bigger iteration. There's always a bigger way to interpret the chart. So as it moves out, there's another foretop right there. And then as it moves out, there's an even larger one. So you have to kind of keep it in perspective. And like, that's what happened right here. You basically had the chance to do a jump. It did jump. It did jump the creek, but it didn't hold it. And that's what was needed to advance. So it may seem really arbitrary that like these are the two spots that it could have happened. And you might be thinking like, that doesn't make sense, you know, and how could you be wrong 2 times in a row? I don't think I was wrong. I think I was waiting, and it didn't ever make the advancement above 520 with support, which is what I was saying was like the big criteria. And each time it did this, it just failed like to hold. It pushed resistance, then drop, pushed resistance and drop. This one was really significant because it came all the way above the top, which indicated to me it was going to have a nasty sell down if it broke down at 503. Right, and then here we are. This one didn't have that, but it did break down. I mean, once it failed to advance, it retreats. It comes back below that upper range at 504, and it has to try again. So there are specific moments. It's always like the end here. There's these specific moments that you can capture that move. And if it doesn't happen, then the opposite's going to happen, you know. And this only has a couple different outcomes. This is either a spring or it's a distribution period. Because at that point, you're going down for liquidity purposes because you failed to jump the creek. Hint, hint, nudge, nudge. We failed to advance here at 520. Now we're dropping for liquidity purposes. Low, right? Instigating a sell-off to get down low. Let's test the waters. Let's see if sellers continue to take it down. Right? There's more to it than that. It's a little more nuanced than that, but that's the gist of it. You fail to advance, so you're going to go the other way. It's not time yet. And it's frustrating. I get it. That's why I stream. Like, try to stream those times, because even though I know that it sucks and it's not fun to watch, I like need to be vocal. And it helps nobody, I think, to just say, hey, this is what it's going to look like, and then just leave. So if something happens and this goes up to, let's say this goes up to 529, and then it starts sliding back through these creeks, you know, some people are going to look at that and they're not going to know that that's a bad thing. They're going to see that and think, oh, it's fine, you know. That's not fine. That's not okay. At least not right away. You know what I mean? Something would have to change. Because an advancement and a slide back beneath creeks is a telltale sign that you're about to make a move lower. And it happened here and it happened here. And both times you move lower. It really happened frequently here as well on this downtrend. And why wouldn't it? Because you're not advancing. So obviously, like every time it's met the edge here, it's kind of done the same thing. So are you hoping against hope? Are you hoping against the pattern? I don't know about that. I think I'm waiting to see if that change, I'm waiting to see that change happen. And if I tell you what the change is and I just leave you to it, you probably could manage just fine. Like, I don't feel like I'm personally 100% necessary. But a lot of times we get people that they don't seem to quite get it. And I don't know if it's because they're not able to hear it. We get like 100 people on here at the peak of the day. And then after that, it dwindles down to about 60, 70 by the end of the day, sometimes less. So I might say something and really only like 50 people hear it. And it's like, well, you know. And there's the guy in our Discord group, and I have no ill will towards him, but he's just very like negative, and I'm frankly kind of getting done with it. So I don't know if he's what his deal is, but he's kind of like chronically negative about AMC. But he was buying like calls every week, and I'm like, well, you could do that, or you could just wait, because every time it's had these advancements and failed, it's been pretty obvious, and it doesn't make sense to do anything until you get confirmation. But I couldn't have said it enough. I feel like I couldn't have said it more. I feel like I kept saying 520 with support, 520 with support, 520 with support. As in, that's like the trading buy-in. Instead, everybody wants to catch a bottom, and then they get screwed, especially if they're going too short term. And that's not my responsibility. It's not my fault. I can't control what people do with their money. I don't take responsibility for that. But it is a little bit, hard for me, because I'm like, well, do you want to lose money? Like, I don't know. Like, I don't want to lose money. It sucks to lose money. It's not fun. It's not a fun feeling, and it definitely doesn't help you be a better trader necessarily. If you learn from your mistakes and your lessons, yeah, you could be an awesome trader if you lose a lot. But I feel like there's been a general kind of misunderstanding about what an advancement has to do and where it has to do it. And the reason that I get bummed out on days like these when you drop a certain level isn't because I'm not overall bullish. It doesn't really necessarily change. Sometimes it does, but it doesn't necessarily change everything. But it can be very disheartening because you're wanting that move and it doesn't happen. So you're like, well, guess we're going to twiddle our thumbs some more because now we have to wait. And whenever these breakdowns happen, you're moving away from all those creeks again. Right? So another thing I said last night, and just very briefly in the Discord group, was that really have to get the rebound here. I don't think it's an optional thing. I don't think that you can twiddle your thumbs as much as you did, previous. This is a different situation because this rejection isn't just local, This rejection is, in some ways, it's partially a macro rejection. So unlike this area back here when we just peaked above at 514, there really was no precedence beyond like the 498 drop at first and then probably going a little lower over time. There really was no precedence to go any farther. I mean, I wouldn't have looked at that as like, oh no, we're driving off of a cliff and just going to drop forever. But when you get into this particular kind of action, it changes a lot of things because this did push over the top of that range. Could it be a phase B? Yeah, it could be. And we talked about that as well. Like on the bigger picture, it's possible this is an auto reaction phase B, and then you're going to maybe create a spring here. But that's a big order. I mean, you're talking about a spring, which is essentially going to go from the bottom at 468 all the way back above 520. There's not really anything else. If it's not a spring, I don't know what to call this. And then when I zoom out on the big picture, I would be like, well, I mean, on the big picture, it just looks like the end of a cat ear, So I'll tell you right now, like, there's a couple of really nasty situations here, So it's not as simple as when that first breakdown. That was a really small one. It doesn't really have a greater impact necessarily. Meaning like at the time, it could have done a lot of things. This one has some really serious potential for downside, and it could be quite devious, We could end up coming back up, and I don't like to talk like this necessarily, but this could easily come back up and redistribute here against this creek and be like a massive UTAD situation where it's distributing along 5 to try to drive the price even lower, And you talk about like precedents, like, well, how would you see all that working out? That doesn't seem like a good thing. I didn't say it was a good thing. I'm just saying like it's a possible thing. And frankly, like this kind of setup right here with a distribution around 5 on the big picture would just look like a gigantic like hook. What I mean by hook is that this is like a UT that drives beneath a creek and then it hooks back up. And don't worry, I'm going to bold this because I'm drawing like a billion little lines. And so that UTAD upthrust after a distribution would essentially just be a hook around the main uptrend here. So yeah, like this is high risk. You know what I mean? This is not a picking daisies kind of situation at the moment. And it's changed over time. The farther this thing went, the more and more extreme things get. So one of the reasons why when that person asked me in the Discord group, they said, do you think it could just go sideways? One of the reasons why it didn't really make sense to me was because as you increase volatility, you're basically signaling to the market that it's time to move on. The decrease in volatility was us exhausting the range, satisfying the range, whatever you want to call it. An increase in volatility here definitely poses a threat if you're just wanting sideways action or you're just thinking sideways action. It wouldn't make a lot of sense, necessarily. So I don't really know why I said, is it possible from a technical perspective? Yeah, because you could keep doing these kind of up thrusts and just keep going like that in that pattern until all of these are complete. But in reality, like this is enough of a nail in the coffin if you came back up to 5s and rejected. So the whole thing is very much on the the edge. I don't believe it's maybe it's not that dramatic all the time. Like day to day, we might not see it as that dramatic. Like it doesn't matter that much. No, but all these little pieces add up. And when you get to the bigger picture and you look at the overall move, this kind of a secondary motion right here is pretty common on AMC. And this is how you would get from where you are now down to perhaps even a lower target at like the 430s, like as low as you could possibly go. Would a triple bottom off 430 be too low, Booksy? No. But that's like by the skin of your teeth kind of thing, There's a creek down here, and I think it's kind of the last resort. And I think the fact that it's there makes a lot of sense because it's right on the 50% mark. Now you guys are like, well, now that you drew it, it's probably going to happen. Maybe, I'm just saying, like, there's a lot here that needs to be, criteria-wise, it needs to be met. And when you look at, we did the comparison to NCMI last week or whenever it was, that what happened in this particular moment is that it went like straight up into the SOS. Basically, it took this higher path. It did break down at the end, just like this. It broke that creek, went up too high, broke the creek down, and then it reversed, and it comes all the way back up to the top, and that puts it immediately in like SOS territory. And that's exactly what you need to have happen here on AMC. So a spring is great, but it has to meet those criteria going back up. So as a trader, you're left with very high risk, You can buy this on a sense of your own personal conviction that you think it's going to go up. You could buy this on a sense of like confidence that you looked at this previous range. Maybe you're thinking like, well, I think it's really strong. I don't think it's going to go down. But I'm not of that opinion just yet. I think there's a lot of question marks that I have in my mind. And one of the things I wanted to do today was look at the 13F filings again and see if there's anything new. I haven't looked at those in a while. See what's going on. See if our emu has bought or sold anything since the last time I checked, which I think it was over here somewhere in like July. So it's been a minute. Yeah, so this shouldn't be thought of as again, it's not like the end all be all just yet, but we're definitely in a situation of, I want to say crisis, but we're in a situation where it's pretty easy to see where we will stop and what would happen. And I think it would be like right around 510 if we did have an upthrust like that. And frankly, like, don't put it past the operator to do such things. I mean, they do whatever they want to do. GME, on the other hand, a little different. It seems to be positioning, or it seems to us to be positioning in a bit of a strength. What is this? Whatever. Because it already advanced back up to this level that Booksy likes. And so if you've been watching here, you probably like, oh, it's back up. It moved all the way up to 2310. That's better than what you had drawn down here. Yeah, I mean, we had talked about a couple possibilities because on the early advancement, it hadn't yet broken this creek. And so we had watched this move. I think this was where we had like that alternate scenario where, I mean, technically this could chop and come back down. And there was a lot of things possible because you don't know if it's going to range. It didn't range, it just broke out. And so at that point, you're like, all right, well, it came back above. Is it going to hold support at 22? And then it holds support at 22. And you're like, well, it's on the creek that it failed. I mean, it failed back here on the 23rd. And on the 19th, it failed to advance here. It advanced here, so it did break out. And then you get this big move past a really important level. On the grand scheme of things, why is this level important? Because it's a historic support and resistance level. I've got it marked off in blue. It's high liquidity at this point as well, but it goes back to a time that may seem disconnected, but it's October of 2022, and there's a gigantic wave wraparound right here that signifies this level amongst other things. And this wave wraparound is the one that we're contending with right now. So this is a major level of support and resistance for us. We spent, let's see, February 2022 through June 2023. So we spent a long time in this area checking it, and now we're checking it again, and we've busted below it. We're like testing below it. We're testing liquidity below it. If we can get above that marker, and I think 2310 is kind of the lowest place on that test that I can identify, then in theory we should be able to try to advance again. And I think we're likely to come back up to this top, which makes sense because this is kind of like your previous range, right? You come back up to this top around $40 and possibly higher. But I think there's a definite chance it gets up there and then comes back down. We talked about that as well. So right now, it's on the small scale, it seems kind of like it doesn't really matter too much. We got earnings in a little bit. It's on the 10th, which is on Tuesday. I just want to make sure I got the day right. It's kind of a strange day for it, but that's coming up. A little different than AMC in that regard. And I mentioned that I think it would be nice to stay above 22. That's just my thought initially. Is it would be good to stay above 22. Even better to stay above 2310. I think to hold high here with a cumulative range would be good. And have to stay cumulative. It couldn't be like massive upthrust here or there. You know what I mean? Like it couldn't set up as a distribution. We don't know yet. It's not done yet. But this is just starting to range, so there's not really much to say. You know, and you might be inclined to say, well, I think it's not ranging. It's just backing up. It's going to keep going. I mean, GME does that from time to time. I would just say this. Until it breaches this outer wall, which I guess as you see this trend is about $25, until it breaches that $25 mark, I don't think there's a strong precedence at this point for anything much further. And 25 is significant because we've already hopped over. You can see the M shape kind of here. It's like really weird looking. There's not much of an M shape, to be honest. You'd have to kind of stare really hard to see that jump. And mostly on RSI, like 1, 2, 3, 4, that's the jump. And then this is the reaction. That's the first big creek jump, and that was the one that leapt over this long-term creek that really we hadn't tested very much. It started on May 14th and went back through that June 7th, the two big roaring kitty moments, I suppose. And then we advanced towards it on the 17th, but we never got to it. And I noted that because it meant that it was creating a shallower creek that was like lower. It finally pushed that resistance. There's no question in my mind now. It's already gone beyond it. But now there's another one, which is the next one down. If you're looking at like a rotation, this would be like rotating it counterclockwise, I suppose. And this is the peak from June 12th, and then the peak from July 17th. That almost is more like a downtrend. If you stare at that, you can kind of see it looks like a downtrend, like a flag, right? And so if that were to break here, then there's a strong precedence that you would advance pretty rapidly back up to the next place on those parallels, which should be similar. I think it is basically the same. I've got two. One is at 32 maybe, and the other's at 40 something. So there's definitely like precedence here to go higher, but you'd have to get above this mark around the 25s is all I'm trying to say. And so right now, like we're kind of sandwiched between two creeks. There's a little pocket below us that we jumped over that goes down to maybe 22, and then there's one above us basically from 25 down to 2390. It just depends on when you get there. That's where the resistance is, right here on the top, and then on the bottom the support. So we're sandwiched right there going into an earnings. That's why I'm like, probably what happens. That seems most likely. You're just going to sit there until earnings and then make a decision. That's just me basically guessing, which you guys can guess if you want to guess as well. So that being said, what about the gaps down below? So this is another one. I don't really know how to reconcile this with what I just said, other than it's possible. And I'm going to just mention it so that you know like what I'm talking about. So down below, we gapped up around 2030, somewhere around there. We gapped up pretty far to above 2050. Now, the fact that we gapped above 2050 and just took off, I think signifies that it's a pretty decent support. But there is a gap below there. And the thought didn't escape me that it's definitely not impossible that you have a full throwback here, come all the way back down to that bottom at like 1990 or whatever. And I thought about, well, how could it do that? Why would it do that kind of thing? The only real precedence I have is A, the gap. That one's one. B, maybe earnings. You know, if earnings dumps the stock first or just dumps it period, that could be a catalyst to take it low and get the gap fill, right? So that's a potential catalyst really nearby. And then notice where that outer creek is, or this middle creek, I should say. I'm going to change the color of it because I've got a blue one that's more of like the trend coming down. We've got the yellow one, which is the really steep one from the top. Let's make this like green or something obvious. Oh, that's not an obvious choice. Let's make it orange. So I'm going to make an orange creek. This is just a local one as well. So this is like the local jump. I do think this was tested on the 30th, but I've said that before and it's still come back and tested things. Really, it's just a fallback level. So if you think about it, if this sold down right now, where would it go? And if it broke through this 22 region, where would it go? Well, if it broke through 22, it would just go right back down to, you know, it would just go right back down to $19.90, $20. I mean, there's nothing really else there. So it makes sense that if this creek were to break, that you would come back and fill that gap. So is that possible? Are we going to get that before earnings? I don't know. I don't know. This is just starting to form out. There's nothing really to look at except for maybe volume. It's just broken the trend sideways. It hasn't really ranged yet. We may be getting like an auto reaction right now. This could be thought of as the auto reaction, the one down, but it just depends on how you view it. If you think it's going to distribute, you would look at that as the auto reaction and so on and so forth. So I don't believe that anybody's analysis on possible fundamentals is always that off. Usually, you guys are pretty smart. I'm not just stroking your egos. I'm just saying most of the people that watch these streams are pretty smart, and they're typically like 90% of you are like, just intelligent, thoughtful adults who are looking at data. And if you look at something and you say like, well, I think this needs to fall into line first, or that needs to fall into line first, I'm probably not going to argue with you about it in terms of like that idea. I think that the concept of catalysts is important. I would challenge this, though, just in general. You know what I think about catalysts. I think they're just there when they need to be there. I think that there usually is some kind of a in the know kind of mentality to the market where somebody always knows. It seems like the chart's ready to go. Anyways, it sets up as a distribution and then it becomes a distribution. You know what I mean? Because of some bad news or whatever. That's generally how I feel about it. But I'd like to challenge this idea, though, as well, and just put this in your head and just remember that the market tends to price things in because what they're trying to do is they're trying to position themselves to make the most money. And although it may seem logical to always have like a really strong catalyst before a move, a lot of times the catalyst follows up the move. And I hate to say it like this because it's going to sound really skeevy. I don't think Roaring Kitty meant to do this by any means. But he and Cohen both did this sort of a secondary pump here because they talked about raising money. And obviously the earnings was part of that as well. But like a lot of it was that Roaring Kitty stream, and I think that this doesn't even like faze me. If Roaring Kitty hadn't even been here, I don't think it would have looked any different. That's the weird thing. Is like I personally don't think it would have looked any different. Other people are going to disagree. They're going to say, "Nah, dude, it looked completely different." But I think that on the whole, like I don't think it would have looked any different. Like we've done stuff like this before, and so you're like, well, then what value did he add? Well, to be honest with you, he didn't add any value. And that's going to sound really controversial. And that's what I was trying to say. Like, it's nothing against him. But frankly, what this did is it generated like a crap ton of FOMO, when he came back to stream. Notice that during this fallout and subsequent push-up, it's just absolute mayhem in terms of volume. The volume almost eclipses, I think it does eclipse, perhaps that first run on GME. I mean, it's crazy. So the stock didn't move, though. So you guys are like, well, that's criminal. No, what it is it's probably institutions are selling into that FOMO. Like they're rearranging their positions. Now later we know that some of that narrative changes with those offerings because of the money raised, and then there was an exit of certain shorts in the play and so on and so forth. But I gotta say, like he seems to have a pretty good bead on what's going on in like the options chain and things like that. He's not an idiot. He kind of makes it seem like he's dumb, but I think that that's part of the show. When you look at what he's doing, there's a lot of intricacy to that. And he pretends again not to have technical analysis skills. He jokingly drew a line on his chart during his stream. Like, here's your technical analysis, and he just made a big wedge. And he's like, there it is. And he was like, that's it. Okay. Right. Obviously, he knew that things were going on behind the scenes back here when he bought in. Nobody's that oblivious, right, when they're putting in millions and millions and millions of dollars. So I don't know if that's like all there is to it. Maybe that is all there is to it. But I'll say this. He basically played right into a institutional trading plan after that point, because during that second run up, that big moment of him coming back and all that FOMO, guys, I don't really don't need to argue it. I mean, I don't really need to. Like, it's exactly where you would expect there to be selling. Frankly, like, it's that simple. You know, you have a first big push, then you got a second big push to try to sell more. So intentional and not intentional, that's not really the question here. The point is like the timing of that was very much, I think, intentional. So one of the things I'd like to kind of put in there for those that are talking right now about fundamentals and value is you have to think about things in like future tense, because you're right, investment is thinking about the future always. You're trying to buy assets, not liabilities. So you want things that are going to return income as you go. And so naturally you're going to look at things that have good value that can return that money that you're putting in and give you a boost. I mean, that's the whole point of investment. But future tense is complicated because sometimes we've seen that it's very on the nose. We run with good news. And sometimes the good news seems to just be there in order to aid institutional traders in their selling process. So that was kind of a little bit of part of the reason why I had speculated, and it's just speculation on my part, that we would run ahead of FOMC, because in some ways it's like if the move is already mostly done, you might get like a final burst, but then retail's FOMOing in, for example, on like a small cap move, although a lot of retail thinks there's going to be a huge rug pull, so maybe there's like a double bluff there. I don't know. It's a double bluff. They know what we're thinking about what they're thinking about what we're thinking. So it's hard to say. But, you know, like that's just another idea to think about is like, I tend to think that the move happens before. That's just usually the way it is. I think that I always think of like, all right, it's being priced in or something's being priced in, you know, whenever we move. And so that way, if good news comes out, you're not like expecting it to continue to rocket. If we moved up to $15 and then they announce some really good news, I'm super skeptical of that. Like that to me is very, very, very sketch. Like very not legit. I don't know what else, how did you call that? It's like baiting, you know. They did the same thing in June. We ran up and then we had two really positive earnings and there was so much good news that came pouring out just because of the ape movement and like the things that seem to be happening, you know, and then all the attention in the media and then the news about these different kinds of like offerings and what they did for the stock. And I remember people saying that the short thesis was busted like all the time. You're just explaining buy the rumor, sell the news. Yes, I am. But I'm reading through the chat right now and there's people talking about what happens during a recession. There's people talking about what happens during the next few quarters, you know. And there's people saying things like it's not going to move until this. So clearly, like, it's not something that's universally acknowledged, even in this day and age. Earnings correlated to stock's value. Da, 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 da. TA based. I like this argument. It's a very interesting argument because you're both arguing that you shouldn't be listening to me. Which is really funny. You're both like, why are you listening to TA? Why are you listening to TA? But you have opposite outlooks on some of those company things. I know. I'm like reading through your stuff. I'm just reading through it slowly, kind of going backwards. I mean, it's easy to argue. I'm reading through your guys' chat here. I'm not gonna read their chat out loud. So Lux Dove, you did say doing TA on AMC is basically useless. Ethan says, no, we hold around 5. Over for the 5. Then you said it's over for the 5 range. Will be above 6 to 9 end of September. Oh, I like that you guys are thinking. I like that people are thinking, they're thinking critically, that you're not looking at everything super linearly. You're not just accepting what I'm saying. That's good. I appreciate that. It's a good place to be. Yeah, what the heck, MPW? I have mixed feelings about this. It's coming up to dividend, and sometimes you get a pump pre-dividend. So just so you know, like, it almost always pumps up and then dumps after the dividend. So I'm like a little bit nervous because that's coming up on Monday. So if the pump is good, the pump. If the pump is decent, maybe it'll be a breakout. But just a warning that a lot of people might sell their shares off after the dividend. People tend to like collect the dividend and then they decide to sell. But in terms of the overall move here, I've just been kind of watching to see what happens. It still looks like there's a possibility in my mind that I hate the possibility, but it's there. This could retrace farther than it did before at 4. You could come back down to like 360s or so. And it's not way out of the question because technically this was a 618 retrace. There is a lot of other retracements that were not made. The 786 and 854 maybe not as common, but they're on this one. But the 786 is down in this pocket, and I think there was like a small gap here around 387 that never got met. So it would not surprise me to see that fall through. I don't want it to happen, but it wouldn't surprise me. And then it's had some trouble. The 180, it's been struggling to get back over that 180 on the daily. And at this point, it coincides with the break of this downtrend, this little pocket region right around 5. So it's similar in some ways to AMC. It kind of has to make that stretch above 5 and 520 to really see an advancement. It's not in a bad place. It's nothing really like horribly negative. This is an example of one that I think is very directly tied to news because it's weird. This is a very bizarre situation. I'm really bullish on this. I think you guys know this. I've been really bullish on it. I think it's way undervalued on the whole, but they've been beaten down by some like negative news about their tenants situation. And it's not news that's easy to shrug off. It's like an active situation. So it's not something that is horribly bad, but they've used it to really leverage the stock to the downside. It's a highly shorted stock. It typically rides at 30 or above short interest. So if it does squeeze, it's going to be like massive moves. High institutional involvement. It's like 70% of it is institutional trading. Very much so, one that could explode in the future, but it's already had a really explosive move. And this is kind of where I entered it. It was almost exact same value around the 450s to 470s back here. And then it rocketed way up. And after that point in time, really everything else has just been kind of ranging in retracements and basing essentially back on the floor here. It's not far away. Like, it's really close. You can see right where it's at right now. It really is. It's like, it seems like a stone's throw away from a potentially huge break here. But why did I say it was very much based on, like, everything's right there, If it pushed up, it's going to rocket. But, like, why did I say everything's based on news? Because they have a problem, and if you don't know much about this, it's a real estate investment trust, and they had some issues during COVID, like a lot of people, with tenants, and it just has to do with the value of their portfolio. So they have a lot of different properties all over the world. There's this particular group of properties. I think it's Steward. I can't remember the name of it. Right, it's been about a week since I read about it last, but they had a big client who was we talk about $1 billion clients or whatever, big client, who owned a chain of hospitals, and they own them, but they were leasing them out to this client, and I can't remember the name of them, but basically they were going bankrupt. And so there's good and bad to that, because obviously the bad is the more straightforward, which is, hey, if you have a tenant who's not paying your lease and it's a huge tenant, then you're not going to make the kind of income you're expected to make. Ironically, they've already surpassed the income that they were expected to make this year. They did that like way a long time ago. I say ironically because it seems like it's been really negative, but they've actually surpassed the income that they were expected to make this year already. So it's like, what's the problem? I don't know. The issue is twofold. You can either get someone else to lease it, or you can sell off the properties. So they started to sell off some of the properties, and I think a lot of it is waiting on that news, because selling off those properties, they're huge assets. So it's not like they're going to lose money on them. They're not. If they were able to sell all those properties, they'd make a huge fortune on like what they have. So it's not like all bad. The problem is that they could also, the other thing is they could also find a new tenant, so on and so forth. Well, when this happened, it sort of put them in a bind for a long time, and it's been ongoing for a while now. So the bigger question isn't so much like, will it happen? It'll happen. They'll fix it. It's been a big enough of a damper on their stock price that I assume, is my assumption, okay? I assume that it's already priced in, like it's part of this plan, is that they brought it low while this was going on, relatively confident that they're going to fix the problem. So they're using it as another way to reaccumulate. But it wouldn't surprise me, again, to see another drop here from a technical perspective. And then from that point forward, I think it's 7. And then I've got a bizarre reading on this that some of you guys, it's weird. It's like, I know that this isn't everybody's favorite stock. No one sits here every day to come hear about MPW. I get it. I picked this one myself, and right now it doesn't look like a great pick, because basically when I picked it out, it was like in May, and it's essentially the same price. And if you were just expecting it to just kind of run, you'd be like, this is a crappy pick, Booksy. All that's happened is the calls have been kind of squashed down. Nothing's really moved up yet. So I've accumulated an insane amount of calls for very, very cheap, with the anticipation that this is going to rebound and make its way back to near $14 in the next year or two. But like if you were just trading it on the fly, you probably would have looked at this and said this wasn't the best pick because it didn't go anywhere immediately. And I get that. I'm being very, 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 very patient with it. I am. And other people have even like kind of been like, "Oh, you upset because MPW's down?" I'm like, "No, I'm not really watching this every day. I kind of check the price. It's been mostly just sideways, so I can't really complain." And I'm looking at possibilities for down, looking at possibilities for up. But there's something that I did on this that's very significant, and it is a 4-year cycle that I don't know like why it would work, but it did seem to work. So in retrospect, I was able to identify like that every 4 years they accurately predicted the next 4-year price, and I don't know how that's possible. Maybe it's this idea of like pricing in the future and like where it's supposed to be at some time, and like, but what's weird is that it's on the technical level. It's pointing towards it, which doesn't make a lot of sense to me. So I had done a while back at this point, I had done an analysis on this concept, and I was like, it's very strange. But essentially, like every 4 years or so, there was a specific measurement in terms of like time. I think I had it on the chart somewhere. Yeah, the proper wave trajectory plus timing, and you have a target. But what was the number? Yeah, it was 1,407 days, which is strange. That's very specific, but that's, I know it's like, how in the heck would you have found that? It had to do with me looking at election year cycles, and then I started noticing a setup pattern from the beginning of the stock, and then I basically was like, that's weird. It sort of began with a lot of this stuff. Like, where is it pointing to? And I know this is very strange. I would have to go back and figure out what I did exactly. Anyways, so I was like, well, let me just try it. Let me just go future tense with it, right? Let's just look. I know the price is 477. We're going to go check it out on AMC. So if you're waiting for AMC, just a minute. I'm looking at this like, well, I don't know what I'm thinking here, but I'm going to try it. So I decided to try it. And the next date up was October 7th, 2024. And so back in May, I was like, I'm going to try to do this. And I know it's insane, but if it hits near that target around that time, I hate to say I got a gold mine, but that sounds really like greedy or something, or cocky. But I mean, frankly, like, it's unprecedented in my own mind that you could do something like that so easily. So for me, it's like, well, I don't know, man. That seems like a big stretch, even for Booksy. I'm not a big cycles guy, like in terms of time. I used to do some of that stuff. I kind of got away from it. But, so this is a bizarre little experiment because I'm investing based on a couple things. One is, well, maybe 3 things. One is the current setup, which I still think looks like a potentially really strong, solid bottom region, almost like a head and shoulder here. Down, down, up again, which could come back up to near $9. But also, you know, creeks, it's approaching a really long widening that's multiple years long. So if it breaks out of that, it should be able to head back towards the top of the widening, $24 over time. Also, fundamentally, like, this is way undervalued. It should be valued around 14. That's like fair market value for this based on what they have asset-wise, and yet it's really low. So it's a long-term investment that has decent short-term technical breakout possibilities going into this rate cut season. It's very possible that this thing rallies this year. But then what's weirder is this other thing that I got going on, which is this cycle. So I haven't forgot about it. And you may think that it's a dead play, but I'm not there yet. I really don't think it is. All right, let me talk about these parallels a little bit, but I think for the most part, self-explanatory. I don't want to like talk about this one again. We talked about that like yesterday. So it's reaching over top of that. I mentioned that this could potentially be the bottom. That's not out of the realm of possibility. It seemed a little strange to say that yesterday, considering how many times we've seen things and been like, this could be it. You're like, all right, I'm sick and tired of this, you know. But in terms of like the overall setup, it could be, because if this is a phase B top, this is the bottom, this could be a spring action right here. It's a heavy volume sell-off followed by like a lighter volume pushback up. All it has to do is hold support over 470s, and it's potentially like a spring action here locally. That's not a joke. That's like, I'm being serious. Like, it's not me like wildly speculating about some really bizarre situation. It's pretty straightforward. It's not ideal because of the way this set up. We talked about that earlier in the stream, because there is a possibility of this being like a false kind of spring, but there's very real possibility it's a real spring. So I talked about yesterday that the overall setup does look pretty good for it, but especially this little guy, it reminded me a lot of the May bottom. There was a strong divergence here. Man, did that hold. I'm so excited. So that held really well, and it looks like it jumped. So potentially, as long as this continues to advance and holds above 474, it's kind of a double spring, because it's like a spring locally right here, and then it's a spring on the big picture here. So there's a strong potential here to make a move up to, and that's why these markings are where they are, is make a move up to 495 and then make another move up to 520. Those are the two tops of this region, and those are the ones that, again, like the local spring would only take you to 495, but that jumps a creek. The next spring, the next spring, if it's a spring, takes you all the way to the top at 520s, and that's an SOS for the bigger range. So the only real fear I have at this point is this potential like hook action, and or if you want to call it a fear, I'm not really afraid of this. If it happens, it happens. This breakdown where it just kind of lags into the end of the week. Those are the only real options that we have. So very, very very, very positive about this move here in a way that may not make sense to a lot of people. I think I went to the Discord right after the stream yesterday, and there was a lot of Titanic sinking memes and junk, and I'm like, all right, first of all, I don't like that kind of stuff overall on my Discord, because it's supposed to be about TA, not about just goofing off. I understand sometimes it's funny, so I'm not going to like kick everybody out just because they drop a meme every now and then. But as a technical trader, like I want to try to keep it about the technicals. But the sentiment behind that was like, oh, so you're saying that like basically we're done for. Like that's what people are saying, on the whole. It's like, oh, we're done for, I just find that to be kind of ironic, because there's definitely a precedence here that this is a potentially really strong bottom, but the weakness is very apparent to people. Like people are like, oh, it's super weak. It looks really bad. And I'm like, yeah, I mean, it would. I don't know of a spring that looks particularly fun. You know what I mean? Like a spring action is always going to have a lot of negative sentiment around it, because it's the definition of it is going below a range. I mean, it looks like a failure always. So I'm not saying that this is exactly what it is, but I am saying it's kind of interesting, because it's sort of speaks to itself, It's like, yeah, the sentiment's bad. I get it. That's actually a good thing in some ways, because if the sentiment were overly good, it wouldn't be a spring. I mean, that wouldn't make any sense. You can't have a spring without some form of despair. Otherwise it's not effective, and it's not a spring. If everybody knew and believed that the downward action was good, then it would never be effective. Like it just wouldn't work. Majority of people have to believe that a spring is a breakdown in order for it to be effective, which is scary. It's scary, It's like bungee jumping, but you're not really sure if they actually attach the bungee cord. You guys are like, that's terrifying. Yeah, it is. That's what a spring is like, though. I mean, it is. It's essentially like you're seeing it drop. The volume's increasing. You're scared. It's going below levels that it hasn't gone through in a while. It feels like it's not going to stop. And the scary thing is that, yeah, I mean, if you're wrong and it keeps going, then you're screwed, you know? That's scary, right? That's the effectiveness of the spring. That's why it's so effective at shaking people out. If it weren't a question mark and it weren't super effective, it would never be used. So when I saw that negative sentiment and just I was like, oh, okay, so people think it's sinking ship, that's really bad. I'm like, all right, well, clearly like they've been effective at convincing everybody that this is done. It's done for. I don't think that the answer to that is the opposite, because the opposite can be just as dangerous. And that's the funny thing about the stock market. The opposite is to think that every downside is somehow like a really good thing. And that's not true. I don't think every upside is a bad thing. Though a lot of them tend to be bad if they're doing it for a particular reason. Like most of the upsides that we've had haven't followed through. We already know that. And so therefore you become conditioned to sort of say, well, upside doesn't seem very good, because it seems like every time we go into upside, we distribute. Right. And that will be the case until you don't. That's the nature of up and down in the market. A range is going to go up and down and up and down and up and down and up and down until eventually it picks a direction once the range is exhausted, and then it's going to go up and up, or it's going to go down and down. So the nature of like the ups and downs being counterintuitive, it does work, but only until the range is done. Right? And then the final movements of the range are almost always like countered, like super counter. It's like the more extreme versions of that, right? So you end up with these really extreme versions of that counterintuitive nature right at the end when volatility increases before you decide on direction. So it's not the opposite. It's not to think that, okay, so you're saying, Booksy, I should be happy that it's going down? No. No one's talking about your emotions here. No one's saying that you should feel happy or despairing or anything like that. And I actually think that that's kind of beyond the point. You're like, no, you just said that. It's complicated. The institutions that drive the market value around want that. They want the emotion. They want the despair. They want the FOMO. It helps to drive liquidity. It helps to bring more money into the market, take more money out of the market. Without emotion, if everybody's emotionless robotic traders, hint, hint, nudge, nudge, because they are robotic traders nowadays, then it's not possible to really trap people or to shake out people, right? Like you have to have that human element of emotion to some degree. And then, frankly, a lot of it's just stop loss hunting and stuff like that too, which is more mechanical. So I'm just saying there's a narrative of like it's always going to feel bad to some degree when there's a spring. That doesn't mean you're definitely in a spring. It just means that that's a signpost of it. You probably will see a lot of people despair. The answer is not to just be like, all right, I'm happy, it's going down. And this is why I think maybe confuses some people about the way I approach things here and there on this channel is I will be simultaneously hopeful, but also a little bit grumpy. Like I'll be looking at this like, man, I'm pretty hopeful about this, but I'll also be like kind of grumpy that we're here. And it's not because I think that I should be this or I should be that. It's just that they're both true. Like I think there's a definite possibility this is a spring action, and once it finds its footing, it's going to just take off. And once that happens, we'll look back and be like, yeah, it was so obvious it was a spring. But in the moment, you don't really know like ever 100% about something, you know. So My answer to it is to not speculate as much. It's just to see like what could happen, what seems more likely, where would those confirmations be? Where are the resistances? Where are the supports? Where are the creeks? And just knowledge is half the battle in the case of the market. If you just know where to look and where that might happen, then you don't have to ask what if all the time. We do that just because it's a way to fill the time and to examine the chart, but in terms of trading practice, like you could set some alerts and leave and not worry about it. You're going to get your answer. And for active traders, these are the levels that you trade at. You don't trade, the bottoms here necessarily. That's a difficult thing to do. Instead, you're trading like breakout to breakout, breakout to breakout, like level to level, level to level. And that's what swing traders would be doing. And they'd be looking at the largest possible swings they could make in the best possible entries for those swings. But they wouldn't be looking at like every bottom as like, oh, I got to try to buy in right here so I can catch the knife. No, that doesn't make sense. Especially for something like AMC or a chart that has historically had really nasty head fakes. You could be catching a dead cat bounce, at any given point. So that bounce may not go anywhere, it may be just a bounce. So I have a lot of thoughts about maybe what the operative may or may not be doing. The operator, not the operative. So like a secret agent. I have a lot of thoughts about what the operator may or may not be doing here, but the easiest way to go about this is to say, okay, what would a spring look like? What would need to have happen? And that's what we're trying to do. And I think it's funny, though, just going into that Discord and having people like flipping out. It's like, what were you doing back in May on the 10th? Were you also like despairing? And then you probably bought in at the top. It's like, it's not the time you want to buy in. You don't want to buy in when the run is like over. Oh, now I'm convinced it's running. Well, great. I don't know. This doesn't seem like a wise trading plan to throw money down the toilet till you're right, or to just read the chart as if down is down. Like, I don't know about that either. So some people, they like to say like, they like to repeat what this price action is doing. And I'm like, that's not technical analysis. I mean, I guess you're analyzing direction, up or down, but that's about it. You're just kind of saying what we're already seeing. That's not really helpful. Like, you're never going to catch a bottom by just saying it's going down. Okay. Cool. I respect that might be where you're at personally. Like, maybe that's just the best you can do right now. But if that's something that you're going to stick with, that's different. You either do it or you don't. If you don't want to do TA, you don't want to do the technical analysis, then just don't do it. But I had people that were posting like, it's done, it's over, it's going down. Like, that kind of stuff was so common all over the place, everywhere. But especially that first Discord group we had, and it was like, that's not helpful. Like, that doesn't do anything. All you're doing is like making people doubt the play over and over again. Maybe sometimes that's correct. Maybe sometimes that's incorrect. But your gut instinct to vocalize your opinion about the downside just because you're upset by it and just saying like, man, I'm upset by this. I'm going to go tell everybody how upset I am and how I hate AMC. Okay. How are you solving that problem? Like, what are you doing for yourself that's improving your situation by doing that? you're generating pity, like, I guess. Like, I don't know what else you'd be doing. Sounds like a really harsh thing to say too, because I'm genuinely like somebody who, if you came to me in real life and you had a bad situation, I would just sit there and like listen to you, and I'd probably help you out if I could. It's not always within the means that I'm not always within the means to do that and help you out, but like I don't really mind somebody that's upset. That doesn't bother me. Like, I don't think that there's anything wrong with someone who's upset about their situation. What's frustrating isn't that. It's somebody who's like chronically not willing to do anything about it. It's like the steps are there, but they don't want to take them. That's different. You know, it's not like somebody who was hit by an earthquake and needs like relief, and if they're pitiful at that moment, it makes sense. Or it's somebody who's like got sick and they need help, you know, and then they lost money or they lost a job and they're pitiful at that moment. That's fine. Like, there's no shame in that. And I'm not using the word pitiful in a mean way. I'm just using it like as an actual term, like full of pity, you know. But then there's people who are just pitiful. Like, people who just like cannot, for whatever reason, cannot get out of their funk. But it's not because of it's not for, it's not like they were trying to, you know. That's the thing. It's like, you see people who try to do that. Maybe they just suffer from like depression, and it's like, well, I get it. You can't just wish that away. And there's folks that just don't do a dang thing. And I don't know what it is, if they're trying to get attention or what. But it's like, yeah, you're getting attention, but eventually it's going to turn into resentment, you know? People are weird like that. Human beings, we're like strange people. We will like love you, and then we'll start to resent you. It's a horrible thing to say, but it's just the truth. I hate that. I hate that my heart does that. But if like I'm trying to help somebody, it takes a lot of compassion and patience to love somebody who just does not want to take care of themselves, you know? You ask any married couple who struggles where one of their spouses is like chronically ill or something. It's always like one of two things, you know? It's always like the person has given themselves over to being compassionate and loving towards their spouse, their partner, whatever you want to call it, and they've just grown in compassion, and so they end up becoming the most compassionate person, and people are like urging them, you take care of yourself sometimes, and they're like, no, I want to take care of this other person, or or they grow to resent the other person because they start seeing it as like this huge burden that's interrupting their comfort in life. It's like these two extremes that grow. And so this early grumble that they have turns into I'm kind of fed up with this person. I worked for a lady that was like that. I mean, if you heard about all the stuff she did for her husband, you're like, wow, she like saved her husband's life basically multiple times and has kept him alive. But the way she talks about him is so resentful. It's like you can tell she loves him, but she's just so sick of him not wanting to help himself. Like, she's gotten to this point where it's like, this guy just he gave up on life, basically, you know? And I've heard that multiple times. And then I've heard the opposite too, but it's like, it's almost more rare to hear about somebody who's just like really nurturing and who just has loved somebody so much that they have become more in love with them by taking care of them, you know? It's super hard. So like, we get that kind of stuff in this AMC community. It's not like, maybe not as life or death for most people here. But like, it definitely turns into, I'm starting to really get irritated by this person who's just refusing to listen, you know, because you want to help them at first, and then later it's like, man, I don't know what to do for this person. But I'm getting kind of tired of hearing the same thing, as if your voice is falling on deaf ears. Like if you're somebody that's buying calls every week and you're losing money every single week, stop buying calls every week. If your only reason for buying calls every week is you have a fear of missing out, FOMO as they call it, because you're afraid you're going to miss the move, you need to get educated because you are not going to miss a move by that much by not buying in every single week. It is not going to happen. If I say to you, and I'm genuinely serious about this, if I say to you that this is the confirmation level, I'm just talking about a very simple thing. I'm talking about pushing over a resistance and holding a support. And that's it. And there's no reason for you to throw money down the toilet to get in 10 cents cheaper. It just doesn't make any sense. And most of the time, ironically, most of the time, we talked about this too, is these option contracts don't move that much from one to the next place. They don't move that much. Now, it might seem like a lot because you hear people talking about how, oh, it blew up like 100%. Well, that's because they bought in when it was like 2 pennies, and now it's 4 pennies. But that's not the move. Like the move is significantly greater, you know. It's like if you're going to catch the biggest possible move on AMC, you could wait until you find support over 520. So what are you afraid of? Like what's there to be wrong about? That's the weird thing. It's like there's nothing to be wrong about. You don't have to get in here and be wrong about it. You just wait. You don't do anything. I know it's different when you have shares. We could all talk about that. It's like, of course it's different when you have shares. So, I don't know. I think there's a sense of like desperation in that act of like, I'm going to continually make bad choices and then try to get people to feel sorry for me about it. When that doesn't even have to be the case. You can just wait. Like it's almost so simple that it hurts. It's like I don't know if the idea of waiting really is offensive to some people. Like, why would I wait? Why wouldn't I want to be super wealthy and right all the time? It's like, I don't know. I have no idea why you wouldn't want to wait. Maybe there's a dire situation. Well, then don't trade the stock. If it's not going where, if it's not going above 520 for 6 or 7 weeks, why are you trying to trade, way up here? It doesn't make sense. It's not about, you versus me or you versus someone else or whatever, or you versus shorts, something like that. It's really not. It's really just you versus this movement. And if you look at the movement as up is positive, I can earn money by doing this when it goes this direction or this by going this direction, then you don't have to like stress about it. That's all I'm going to say about that. My little rant for the day. It's not meant to be like a self-righteous rant. I genuinely do care if you're in a bad situation and you're trying to get out of it. I do. But at the same time, it's like trading is a very personal thing. It's your responsibility. And if I say stuff over and over again to emphasize it, you get to decide whether or not you listen. And sometimes you're not going to listen and you're going to be right and you're going to rub it in my nose, that's fine. And then sometimes you're not going to listen and you're going to be wrong and I think at those points in time it's like, what were you wrong about? It's not because you didn't listen to me. It's really whatever I was saying probably mattered, Like there's a there's a fact behind confirmation. It's not just a human being. Like I could say this, but someone else could come say this too and I would still agree with the fact. Like it would just be, it's equally as true. Learning how to identify those fact points is really important. Like really important. Because it gets rid of the bias. It's kind of like, Yeah, that's just a fact, Booksy. And it's even so much a fact that you might say it's irrelevant. Like, you don't need to say it because everybody should know it. But not everybody knows it. That's the weird thing. And for some reason, to some people, this doesn't even register to them. Like, this is not the fact. The fact is they have to get in down. I don't know what they're thinking exactly. You have to get in at the bottom or something. That's how you become a good trader. Is you have to buy in and at the right bottom and get lucky. It's like, I mean, kind of, but no. You don't. You just have to know where the direction of the range is going, and that could take time. It's an overarching kind of opinion, not a spur of the moment decision. Yeah. That's another good point, fidget spinner, is like there's more than one stock in the market. AMC is a tough one. It just is. And I've talked about this before, and I'm not saying it because I've been nose deep in it. I mean, to some degree, yeah, I know this chart and this stock better than others, but like, yeah, that's obviously true. But I mean, it's a different beast. It just is. This is a strange play. It does some weird things at times. And I know that's true because I've seen it happen, but that wouldn't be enough for me. That would just be me saying, like, okay, well, maybe I'm just misreading it, right? Like, I'd have to say that. It's true that when I see other people that I've actually trusted who are really good traders look at AMC and say, this thing is somewhat jacked up sometimes. Like, it just doesn't make sense. It does things that are just not completely out of the realm of possibility. It's just very bizarre. Like, as if, again, operators are like changing their mind or something, you know, where you're reading the behavior of it and then it suddenly just changes. Things like that. Or it's very, very good at disguising its price movements. That's another possibility. So I legitimately think AMC is a hard stock to trade. It's got massive returns on some of the bigger swings, but it can be very challenging. And I've made just as much money if, you know, in the last year on IWM, like an ETF, or even some of these other ones that you guys have asked me about. And it's weird because I want AMC to run, but there's a whole lot of question marks. All right, Fintel. It's basic stats. So I'm going to go through Fintel's stats on AMC real quick. I'm just reading off the site. Fintel is just a single data source, but they source from like a lot of things. Institutional owners, there's 383 total institutions in this play. That's a lot. 357 of those are long only, meaning they're only longs. They're just in it. That's a lot. So 357 out of 383. I'll put some of these statistics on here for you. So let's do the math on that. Because the numbers are cool, but I like percentages. So I'm going to do 357 out of 383. So 93% of the institutions in here are longs. Wait a minute. I thought all the institutions were against AMC. Nope. That's false. 12 of these 383 are short only. So who are you getting screwed over by? You getting screwed over by the 3% that are shorts? I don't think so. You mean a long operator would drive the price down? What? Yeah. I mean, it's that simple. 4% are both. They have both positions, long and short positions. Does that surprise you? They have accumulated 121 million long shares. This is probably not the most accurate thing because you're like, well, that's way less than the float. I know. We'll have to check it out. Just give me a minute. I'm going to see where that number comes from. I think because this is 33.5% of the float, which is not enough, but it's something to do with what's been filed. So hang on. I'll read through it. It has 333 institutional owners and shareholders that have filed 13 DG or 13F forms. So I guess it's possible that there's some that aren't filed. I don't know how that could be possible, but these institutions hold a total of 121,600,000 shares. So I guess I can add those numbers, but I'm just going to put 121 million shares. Largest shareholders include Vanguard, BlackRock, Susquehanna. Susquehanna. I know that, but I don't think I'm saying it right. International Group, Renaissance Technologies, Vanguard Total Stock Market Index Fund, Morgan Stanley, Vanguard Small Cap Index. A small cap index holds AMC. Yes, that's IWM. Vanguard Extended Market Index Fund, Geode Capital, State Street Corporation. AMC Entertainment institutional ownership structure shows current positions in the company by institutions and funds, as well as the latest changes. Major shareholders can include individual investors, mutual funds, hedge funds, and institutions. Yada, 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 yada. Share price as of September 3rd is 463. Now, this is interesting. The institutional put-to-call ratio. Institutions with more than 100 million assets under management must also disclose their put and call option holdings. So they have to, if they don't have more than that, I guess they don't have to disclose it. The chart to the right plots the historical put-call ratio for this instrument. So let's take a look. These charts are always weird, kind of hard to read. All right, shares times 1,000. Call options, put options, call options green, put options. So let's see here. How long? This is not very long. Oh, what does this say? Share price. So what the heck? How is there multiple scales on the x-axis? This is a ratio though, so this doesn't really tell me much. It's too recent. It's July 14th to July 24th. I don't know if I care about that. Let's see. File date 8/1. Oh wow. Discovery Capital Management. Latest shares 24 million. They own 6% of the company. And then 7/10. So that was the one that I saw last time. They had 20 million shares. Now they have 30 million shares. That was the Vanguard Group. Mudrick Capital. Mudrick is back. 8-1. You guys are like, Mudrick? You don't remember that? Mudrick was the one that people called it Fudrick. They were given a share offering and they sold it when AMC ran up to like 70 or something. Remember that? I think they were even in one of the documentaries or something. They interviewed the guy. They have 17 million. Interesting. And I'm not seeing any change in Vanguard. I got 7 date. Humankind Benefit. They sold 100 shares. Who cares? All right, let's see if I can update this. So end-port filings are different, a little different. So these are 13G, these are 13F. We present 13D and G filings separately from the 13F filing because of the different treatment by the SEC. 13D and G filings can be filed by groups of investors with one leading, where 13F filings cannot. The result is situations where an investor may file a 13DG reporting one value for the total shares, representing all the shares owned by the investor group, but then a 13F reporting can have a different value for the total shares, representing strictly their ownership. This means that share ownership of 13DG filings and 13F are often not directly comparable, so we present them separately. Okay, well, the point is, on 8-1, this is kind of the last time we have. That's a lot. This is not like a small amount. This is a huge amount. Discovery Capital Management. I don't know what that is. So 8-1 is August 1st. Interesting. Why is it always like there? You guys are like, well, what are they doing with their shares? Maybe they're trying to screw us over. Maybe. That's interesting, though. 8-1 and 7-10. Excuse me. Sorry. It's just July 10th. Let me see. For some reason, these filings seem to like dump the stock quite a bit, don't they? I don't know why. This seems to be the case all the time. This is another one over here. I don't know why. Maybe it has something to do with when they're filing them. I don't know. Just some kind of a cyclical thing. I feel dumb if I don't know, but I don't know. So interestingly, on 8-1, Discovery Management Capital and Mudrick Capital Management had 24 million shares and 17 million shares posted. So let's take a look at this. They disclosed 24 million shares of ownership. Guys, this is a lot of big value ownership. Rob Citron. Wasn't there like a Citron research group or something? That's what I want to see right here. So, let's see. Disclosed equity positions, 13F and N-port filings. So they had reported previous ones. So this is 2024. This is in February. This is Valentine's Day, February 14th, 2024. They were one of the sellers. They sold 342,000 shares. So what's interesting about that is that's about the same time that Vanguard also disclosed, because they disclosed in February as well, and they had sold like 60 million shares. So you guys are like, well, that's not good. I know. So part of this may be the lending out of shares. Like you're like, well, why would you buy shares and the price just goes sideways? Well, if they bought those shares here and then lent them all out, it kind of gives shorts more ammunition. So it's definitely a possibility that it's not quite black and white, because obviously they have the ability to just lend out those shares, and that would obviously change some things. So that's interesting. So they had previously sold off, and I guess they bought back in. That's a lot, though. That's not like a small amount. 24 million shares. That's a huge buy-in. Mudrick Capital owns 17 million shares. We can look at the 13G if you want to look at it, but it's kind of like just a bunch of numbers. It's not really exciting to me. Maybe you could look at this and find something that I can't, but let's see. These are kind of broken up into different people. So I think each of these is broken up by like who owns it, I guess within Mudrick or whatever. Distressed Opportunity Master Fund. Here's another one. Distressed Opportunity. Oh, that's not good. Dislocation Fund. Distressed Opportunity doesn't sound good. You guys are like, that's not good. CAV Master. Drawdown Fund. Uh-oh. You guys are like, what? Mudrick GP LLC. Distressed Opportunity Fund. Jason Mudrick. That's weird. Wait a minute. What's the total amount? Why is he claiming all of it? 17 million. Citron, yeah, that's Andrew Left's firm. It's just weird that he has the same name. Mudrick Capital Management. I think it's just naming him because he's the manager. Well, let's look it up. I bet it's bad. Let's take a look. It says a distressed opportunity fund, kind of exactly what it sounds like. A distressed opportunity fund is an investment strategy that focuses on buying companies, debt securities, and loans that are experiencing financial distress at a discount. The goal is to identify and resolve the distress, which can lead to an increase in value and potentially high returns. Distressed investors can find opportunities others may not. These opportunities can be lucrative. Investors may restructure the company, adding value to the assets, and then sell them off. Distressed debt strategies are often used by hedge funds, private equity funds, and debt managers. This was the AI response. They're obviously really risky. So under the premise, so they're buying it under the premise that their value will increase once the distress is identified and resolved. That's a pretty good sign, though. This type of debt can be loosely defined as obligations of a company that file for bankruptcy or close to file for bankruptcy in the near future. Why a hedge fund or an investor would want to invest in anything with such high risk? The greater the level of risk, the higher the potential return. Well, this isn't necessarily investing in distressed debt, although I wonder. They did say they were talking about turning some of their debt potentially into equity, so that would be like them buying up the debt. Yeah, the debt for equity swaps. But this is on August. There was nothing announced about an August debt for equity swap. This is just a fund that they have, and it's just one of many. So they're splitting up. You might be right. They may be buying the debt. They may just be buying the stock, though, because it doesn't really clarify. What I'm reading about right now just means that it could be either. You could be investing in a bond for the debt or whatever, or you could just be investing in a stock. Hard to say. So they could have been purchasing yeah, it's a debt for equity thing, but I'm trying to figure out what a drawdown means. It's peak to decline. I mean, that's obvious. But what does a drawdown fund do? I don't want to know because there's different things here. So one of them definitely says distressed opportunity fund, and the other says distressed drawdown fund. It's just the same thing. It's giving me the same answer. So, Mudrick. This is interesting. Aha. So this was back in, now the plot thickens, June 4th. This is shortly after. This is in July. It says, Mudrick Capital's Management new drawdown fund marked its first close on June 1st. The distressed credit specialist is currently targeting a total of $500 million for Mudrick Distressed Opportunity Drawdown Fund 3. So this is Fund 2. I don't think there's anything about Fund 3 in here. Let's see. That doesn't matter. The new Mudrick Fund is focused on stressed credit, liability management transactions, special credit situations, and distressed credit, according to the investor, claims to allocate about 80% of capital to the U.S., 20% to the U.K. and Europe. A drawdown vehicle is similar to a private equity fund with a fixed term and capital call structure. The new fund's 5-year term includes a 3-year investment period and 2 years for harvest gains. This is Mudrick's third drawdown fund. The first generated a 16.2% annualized net return. The second fund has generated an 8% annualized return and entered a 3-year harvest period in March. Harvest period. Selling off. But that would not make sense. This wouldn't be like a harvest period. This would be like they would have already harvested and then I guess they're reinvesting now. Because then that would make sense because March is the Q2 or whatever. We know there was a big shift in values. Oh, wow. Mudrick's hedge fund, Mudrick Distressed Operation Fund, is having a tough time in 2024. It was down 7% for the year through April after gaining 1.3% that month. Had a strong May, blah, 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 blah. All right, there's a whole lot more, but I'm not going to go into that. So, yeah, basically, they're buying up shares. Maybe it's a debt for equity kind of thing, but it's kind of interesting. Now I'm curious about the other one, Discovery Capital Management. This is also 13G. Let me see here. That's a huge position, though. I mean, they've taken COMP. I've seen some of these names before. Peabody Energy. Bob Evans Farm. Let's see if they've ever invested in AMC before. I don't think they have. Nope, they may have. Nope, they have not. This is the first time they've ever touched it. At least recently. At least with this maybe they have a 13F filing, but they don't have another 13G filing. Connecticut. Citron, not Citron. That's how I said it wrong. 24 million share position. Aggregate amount, let's see here. Oh man, classic. Citizenship, listen to this. Citizenship or place of organization, Cayman Islands. Oh my gosh, it's hilarious to me. Sorry, it's like classic. Hedge fund. They're in Connecticut, but their citizenship or place of ownership is in Cayman Islands. It's funny. Well, this is ugly. This is an ugly, ugly one. Non-available. See Exhibit A. Attached. Where's Exhibit A? Exhibit A. Oh. I'm not looking at the right thing. Number of shares as to which the person has. Here we go. Nothing. Master fund. Master fund. What's the point? Why did they file a 13G then? parent holding company or control person in accordance with Rule 13D. Maybe it's a D, not a G. Hang on. No, it's a 13G. Well, this doesn't give me much information. 24 million shares. But then this says 22 million. So where's the other 2 million? I don't know. This makes me feel dumb. So it says that there's 24 million owned by Discovery Capital Management. Robert Citrone, I guess, who's the manager, is also the name on that. But then it says that Discovery Global Opportunity Master Fund only has 22 million shares. So does he have the other 2 million? Like, why is there a difference? It's not even, it doesn't make any sense. Well, I guess there's nothing I can say about that. So basically, this is just like a master fund, and apparently there's 2 million shares that are just out there somewhere. I don't know where they are, because it says they have 24 million on their filing, but then if you look at the master fund, it's only allocated to 22. Current portfolio holdings. So they have 778 million. So it's not a huge percentage of their portfolio. It's like 3 or 4%, 5% or something. I don't know. They have a lot in certain things. Amazon. It's different sectors. Interesting. Well, know your enemy, right? Art of War. We already know Vanguard. I'm surprised that they haven't filed anything else, but well, I guess I'm not that surprised. But they have 30 million. And theirs are multiple. They were the ones that had the. That may be more interested to see if they have another of their short reports. So let me see about this. Let's see. We would want to see a. Russell 2000. Some of these are really small. Vanguard. Oh gosh. BlackRock. Ooh, what are you doing? Okay, here we go. So this is 813. I was like looking up here. They don't have any other 13G. But they do have a 13F, which now is the same. For some reason, they have a 13F as well as a 13G, but they filed their 13F a month later. I don't know. I'm shaking my head right now. Like, I don't know why they would do that, because this is the same number. Latest shares. BlackRock up to 20 million. They're climbing. So they didn't have that many last time I checked. That was on 813. 815, Susquehanna. They got a call option. What is this? On 815. This is fun. Let's see who we're trading with. $1 million call option. Potentially, I guess. It says on August 15th, which wasn't that long ago, Susquehanna International filed a 13F HR form disclosing ownership of 370,000 shares of AMC valued at $1.8 million. Ooh, this is a long entry. Previously filed a 13F on May 7th, disclosing 900,000 shares. So they exited shares 62% during the quarter. May. That would make sense. So they sold a lot during that run up. They sold like 2/3 of their position. It says they have a history of taking positions in derivatives under the underlying security AMC in the form of stock options. The firm currently holds call options representing 12 million of underlying shares value at $62 million and put options representing 3 million of underlying value at $19 million. So they've got about 4 times as many call options as they do put options. So they're playing both sides. Interesting. There's probably some things I can't see on here. This is the big difference, right? From May to here, they obviously sold 600,000 shares, but that makes sense because of the run-up. They probably just sold them during that big climb. I mean, they could be selling like the whole time. They could be creating quite a bit of a wall. You don't really know the story. I mean, they may be one of those sellers that has a wall at 520 and they're selling off every time it hits 520. We don't know. Disclose call options and disclose put options. So here's the straddle, I guess. So here on 815, they've got a call option. They've got 12 million shares, I guess, tied to that. And then they've got another put option on the same date, 3 million. I wonder if I can see. I don't think they have to show you anything very specific about that. Probably could find it. You'd have to look through the options chain, though. Sapinski. He's an assistant secretary. I guess he's probably the one that had to file it. I'm bad at reading these things, guys. This is just the cover page and the summary page. This doesn't tell you anything. Primary document, the file. Ugh. God. Whee! I had to go through all this paperwork. Oh, man. Boring. That's what Booksy says. You guys are like, what do you mean boring, Booksy? This is important. Yeah, I'm not going to sit here and read through all this, though. Your page is not responsive. Yeah, I know, duh. It's like a billion lines of text. It's not going to go through. Whatever. They're more heavily weighted in calls, so they seem to have done some kind of a, who knows, some kind of straddle. I don't know. That's a lot of shares potential. They have traded this before. So in May, this is important because in May they did the same thing on May 7th. So let's consider this because on May 7th, this group supposedly started selling off in that May run-up, right? So they actually entered a position on the 7th. Let's take a look. This is the position that they entered into. Let's see, if we have 900,000, they sold those shares down. So they had just a straight up share position of 900,000. They got rid of 600,000. But this is where I'm looking right now. They have a history here. They've done this before. They've done this multiple times. They always do it. They always seem to marry a call and a put together. So let's take a look. This might tell us something about their investment strategy. So on 5/7, And you guys are like, what about AMC? It's just sitting there. It's at 474, guys. On 5/7, this is May 7th. This is the one that they sold off apparently like 600,000 shares on that run up. But this is what I'm most interested in. So they had in call options, and we could divide that by 100, I guess, to find out how many they bought. But it looks like, I mean, it would be like what? Take away all the zeros or whatever, you'd have like 7,000 or something ridiculous. I don't know. So they had 7,500,000, and then 4 days later, it had ripped. We don't have any idea when they sold those. I don't think they have to disclose when they get rid of them. I could be wrong about that, but I'm not seeing any kind of obvious. Maybe they do. I don't know. Anyways, that's weird too. And there's the 214 again. That's that February 14th date again. So on 5/7, they had 7.5 million shares, and then they had 7.5 million shares in calls within the call options. And then in the puts, they had 2.2 million. So they were more heavily weighted on the call side at that time in May. So they would have won big, assuming that they got out of those put positions in due time. In February, they had an incredible number of shares in their call positions on the 14th. Very low number of puts. So they're, and then same thing here on 11/14/2023. That's November of 2023. High amounts of shares. I mean, they could have lost money. It's not like every one of these guys that trades is like a perfect trader either. They lose money really fast on some of these higher risk plays, just like we do. Yeah, these are new. So it looks like they're very bullish. I mean, you can kind of read into it that they weren't bullish here because they sold shares, but they sold shares on that big run up. You can't really blame somebody for doing that. But Susquehanna, or however you're supposed to pronounce it, International Group, seems to be pretty bullish on AMC. They've been heavily weighted calls, not shares. So, not necessarily shares, I mean, because they could sell them. They could exercise. What's interesting is the timing, I think, is more interesting. So, the only one I'm not sure about is this 214 date. They could have, I guess they could have gotten rid of them on that run up, on that rebound, because we were down in January and then pumped back up. So this 1114's got to be a bust. It's a huge number. So anyways, it's not like a significant size of their portfolio, I'm sure, at this point, but they are bullish on it again. So in May, they made a bet 7-2. 7-2 in favor of calls versus put. Now they're doing 12-3, maybe more like closer to 13. I don't know. We can do whatever you want to do it. You can average it in. So yeah, I think it's pretty straightforward. If I have way more call options than I do put options, I'm typically doing that because I'm a bull. I'll just keep it simple. BlackRock does not have calls right here. Renaissance Technologies has 10 million shares. Vanguard's going crazy buying stuff. They have a ton of this. They're all over the place in here. Citadel has a call. They have on 8/14. Now Susquehanna also has the put option, and then so does Citadel. They also have the put option. So this is interesting. Let's take a look at that. Citadel's, I can't even read that number. What is that? $494 trillion? No, $494 billion. That's millions. Yeah, that's right. Whew. That's crazy though. That's a huge, that's just a huge number. I don't know if we're going to find what we want to find here. They probably have like a bazillion filings, so. Oh man, I'm never going to find all this. Oh crap, it's too big. The organization, I mean. Forget it. Who cares? It's too much. I can look at them more directly. Hang on. Bear Mountain Capital. We bought 2 shares. That's hilarious. There's not that many people shorting it. Here's some shorts right here. This is the same as before. 827. Wait a second. That looks like a lesser number. Allspring, they're short. It's not that many short positions, guys. 827, that's a newer filing. Let me see if I can find. Let's just look at AMC. Let's see something real quick. $253,000 shares. I think that number went down. Negative. I think they covered some of their short position. I think they covered over 100,000 of their short position. Yeah, right here. See, on August 27th, so this is pretty recently, Vanguard Market Neutral shares filed an NPORT P form disclosing ownership of negative 250,000 shares, which means they're holding those. They opened them short. That's what the negative indicates. This would be a value of negative, as we're betting against it, right? 1.2 million as of June 30th. The entity filed a previous report on May 29th disclosing a negative 349 million shares of it. This represents a change of negative 20. So they reduced their short position by 27%. Now, it might be a little confusing because you're like, well, they own 30 million. So reducing their short position by 30% doesn't really seem like a big deal, but it is a big deal. So they have been exiting. We were right. Oh, man, that's so good. Good to hear. Now, this Allspring guy, they're not the same, and they've been shorting it as well, but what the heck? But the, when was that again? Hang on. Holy cow. So that was 827. That's a big deal to me anyways, because so this was the one that I said I thought was really suspect. I thought it was really odd because of the timing of those. So they had actually increased their short position. So I'll just show you. So this was the first one. that they filed, and then they filed it again here. And they had actually slightly increased their short position. This is like the biggest short fund. It's not that huge. It was like 350,000 short position. And they had 2 disclosures, and it only changed by like 1,000 shares. They basically had sold an extra 1,000 shares short. And I mentioned that there wasn't really any evidence to suggest that they couldn't have swapped out positions. It's just that they filed it again. And both the times they filed it were right on that 485 gap. So I thought that was kind of curious, and I mentioned that previously. We talked about it. Now we have another filing that was made, and this was made on 8/27, and they reduced it by over 100,000, which is significant. So here, where is it? Wait, let me double check. Sorry, guys. My brain short-circuited. 8/27 is really recently. That's like not that long ago at all. Allspring has been short since 6/25. So they've not really changed their position at all. They must have entered early and they still think it's a good hold. They're just holding it. So this is 8/27. We're going to make sure I get the date right here. Of course. Of course it's there. Of course it's there. Oh my goodness. So this is the same deal. So but now they've actually, at some point, they've exited over 100,000. I think I was kind of right. I mean, maybe this is a weird theory, and maybe it doesn't hold a lot of water, because who knows? Maybe there's something else going on. Some of you guys are better at this stuff. That's a pretty significant reduction. I mean, they reduced their portfolio short position by over a third. So like, that's a big deal. I made a case that one of the things that might be happening, based on what these numbers show me, is that the reason it was brought down to here and we're wrapping around this particular level, obviously, we talked about all kinds of stuff and we went on and on and on. This is very long-winded. I don't want to go into everything. But it may be that those short positions, which they had anyways, it wasn't like they didn't have any short positions. They had opened them back in like February. So like some of the others that... some of them were open in like February 2024. Some of them were open like way back here. And I think that the short positions were actually from way back here somewhere. Like I remember there was a report somewhere maybe in this area around December, if I recall. That's like the next report back. It was pretty much the same thing. It was like back in December. So they held this short position all the way down. And now they're exiting it. So that tells you something. And I was speculating that maybe the part of the reason is that this is the, to some degree, this is kind of like the threshold of, and there's a number of things we could talk about. Like using it for a floor is one thing, maybe right now, right here. But I was speculating that perhaps some of the buy-in that we were getting wasn't really buy-in as much as it was just the shorts, the short fund closing. It's not enough volume to like move the needle incredibly, so you wouldn't say that, but it's been disguised in here. So they've managed to cover a third of that position. They don't want to be caught, I think, getting blown away if this doesn't go the way they want. It looks like maybe the only fund that might get kind of screwed is these other guys, because now they don't have the largest short position. Now it's Allspring Global. I don't know. It doesn't really matter. There's as many as they want there to be. If you have this many institutional ownerships, you had like 383 institutional ownerships. That's a lot. I'm sure most of those institutional owners, it's over 121. That was just million in those long positions, but there were more than that. You got hundreds of millions of shares available easily. So it doesn't make any difference. I'm not going to look at like specific numbers. All of the institutions are more than willing to lend out their shares to short. What I'm more curious about is how they're actively managing their positions that they have. Are they changing them? Are they altering them at all? This Allspring fella, they got in on 625. 2 short positions opened. So they have more like 300 and... Actually, that's a really specific number. They have like 340,000. So they had about as much as Vanguard had. And they have that until... Or they've had that since 625, 2024. So that's a more recent one, isn't it? 625 would be June 25th. Ooh. Are you asking me if a short covering their position is bullish or bearish? Is that what you're asking me? Why would you cover your position if you expected the stock to go down lower? I mean, it's a serious question. I feel like you could answer that yourself. You probably would hold if you thought it was going to continue to get lower. This is interesting to me because the 625... They really have, I know they have 2 filings, that's weird. So they really have like 340,000 short position. That's a big short position. So they're the biggest. Allspring Global is the biggest short position, not Vanguard anymore. Vanguard is the largest owner. They have 30 million shares in ownership. If you look at 30 million shares in long-term ownership versus 350,000 in short, it's not really a big deal, you know. I'm suspecting that during this time period that their short position may have been exiting their short positions, and I was right, which makes me happy because I was thinking that part of the reason we came back down here was this was like a more agreeable place. It's like a floor, a bottoming kind of floor action. It doesn't mean they couldn't go lower in like a sudden dip or be saving some, but they probably already have profit. They've had this since at least December, so it's been brought below that $7 area, and it's been brought back down to where they were here. Here's why this is important, because again, from the February 29th filing through the May filing, they had no change in those short positions. They did not seem to have changed it. Now, they could have closed some here and then opened more. But basically, there was no exit strategy. But now, after going sideways, basically at the exact same level that they were here, they've now disclosed that they've lessened that position by 100,000. They've exited it. So during this massive, what we would call like a squeeze moment, they didn't seem to have changed their short position at all. The only short that seems to have entered here is this guy, who now has 340,000 short position, which I think is very fascinating because they've disclosed it here on this filing, and I'm wondering... I could look and see, but I'm pretty sure they have to file that within a certain, I don't know, how fast they have to file those things. So they've got 2 filings here, so I'm not reading both. I'm just going to read the one, the bigger one. All of them. I'm sure they've loaned out as many as they want. Or maybe a decent percentage of them. They're different funds. So the 30 million is not one fund. It's like 7 different funds within Vanguard. So they're different fund operators. They're different people who are operating those funds. So they're not. It's not like one person who's looking at 30 million and deciding. So each fund might have different goals. Some of them may not loan much at all. Some of them may loan their entire thing. I don't know. You'd have to look because there's a 13F filing that shows all of them, but there's a 13G and it shows the individuals, and there's a lot. There's a lot of funds that Vanguard has. So they are using all of them. A lot of them are using it. Some of them are like based on small caps. Some are just what they call like a neutral investment fund or like a certain kind of market investment fund, whatever. They're trying to achieve certain things. They've chosen to take positions in AMC. So clearly they've invested in it as a risk-on play that they think they're betting very heavily that AMC is going to continue to go up. They're not changing their position, at least as far as we can see. It doesn't necessarily mean they're going to hold it forever, but average price paid. You have to click it to unlock it. You have to pay. That's the good stuff right there. How much did they pay for those? You'll never know. This is a really tiny percentage of allocation, though. It's not going to like hurt them if it goes under. This is like less than 0.2%. So they're, in terms of like how much money they're throwing around, if they lost all the money on this position, it would not kill their company. You know, it's not going to like put them underwater or something. It doesn't really say much else. I think these filings are extremely straightforward, and I'm not seeing any kind of extra information. So they had a value on April 30. Wait, what? Doesn't make sense. June 25th. Why would they say the value is negative 900,000 in the past? April 30th. That's like 3 months prior. That's dumb. Maybe they only have to disclose the value back to the previous quarter end or something. Current value is sitting at 1.4 million short. Well, I mean, they can't be doing good because, at least for what we can tell, on June 25th, they filed a form. So if they got in back here on the 25th, I mean, they would be underwater pretty much the whole time. Basically, I don't know where their average is. We can't really tell, but it would probably be around here. So I can't tell. I don't know how quickly they have to file those kinds of reports. Some of them have different rules, and I'm not a genius on those kinds of things. I'd have to look it up. File date is when they file. 13G effective date is when the position was taken out. Yeah, but for these other ones, they're not. They're a different kind of form. It's called a NP. I forget what it's called. Something N port filings. So you'd have to look at file date, effective date. Yeah, I don't know. Point is that at least for now, it doesn't say. I guess you could assume if there was an effective date, 4/30. So they didn't file. Maybe that's all it is. It's just 4/30. That's why they're using April. So they opened it up in April, I guess. So they're fine. They've made money on it. They just haven't covered that position yet. That could also tell us some things. Oh yeah, how's that possible? Something's wrong. I read something wrong. As of April, this doesn't make any sense. As of April, how could it have increased in value? It was. I feel stupid. So they had April 30th, 2024. What? Why would they not be like screwed? I don't understand. How is that like possible? How could they have gained money on a short position from here to there? That doesn't make any sense. See, I think that there's something missing. Some piece of information is missing there. Because it doesn't make sense. Point is, I guess the point would be that we still think they have probably 300,000 shorts positions they haven't covered. Maybe maybe there's something else to it. Maybe they already had. I don't know. I really don't know. That doesn't make any sense. Whatever. That doesn't make any sense to me. But that's what it says, so I don't get it. Either way, I still think they have 300,000 some odd shorts. And then the closed positions are here, and there's not really much to say about that. They're just closed positions. So maybe they closed the position. It's possible. But then why would they have filed it so recently? I don't know. Allspring. Yeah, I don't know. It doesn't make sense. That's a huge short position. So, whatever. All right. Point is that institutional investment on AMC has definitely grown quite a bit. And there's a huge amount of longs in this play. Some of them, like we're talking about Mudrick, seems to be interested in the distress of it. That could hint at debt for equity type deals. Another, like Discovery Capital, they just seem to be really comfortable playing calls and puts on it. And they've been heavily, not heavy, but like, 12-3 is pretty heavy. So they've definitely leveraged to the upside. Vanguard still has 30 million in shares. I'm not seeing any kind of indication here that anybody's like really dumping anything. Some people are selling. They closed a put position here, capital management. But Allspring was the last one to open a short position. Why is the file date not sorting correctly? There we go. Optimized Strategy Index bought 262,000. That's a pretty big buy on 8/29. That was very recent. So, you wonder, like, you sit here and you think about, like, well, what's going on? And we talk about this stuff all the time. We talk about the, why would you bring the price down? You're trying to find liquidity. You go down here. August 29th is right here. They bought that. It's not just them. Obviously, there's probably others that have bought. It seems to indicate that they entered into a position, at least to some degree. Regardless of maybe how that
we would read that in retrospect or whatever. Doesn't really matter. The interpretation of that may very well be not a leading indicator. I don't know. But I think that you have to just take it with a grain of salt and say, yeah, this obviously a lot of these people are loaning out their shares, but if that's the only concern you have, then you're kind of missing the big picture. Like the AMC definitely made a ton of money loaning out shares. No one doubts that. It was one of the, if not the leader last year. But AMC also tanked like crazy last year, and this year's been a bit different. If we look at the overall price action, it's down, I think, on the year, or it's like slightly up on the year. But year over year, I think it's down. But like, I think it's up slightly this year. I don't know. I have to go look. My brain's not really working right now. I'm getting hungry. Point is like, there's still a lot of longs in this play. Most of them are longs. So why take it down? I mean, maybe just it's that simple. Like you're taking it down, you're getting people who are buying in. Not seeing anything like too crazy out here. We've talked about the options chain. I've said repeatedly on here that I don't think that it's the best thing to do. Like, it's not the best thing to necessarily watch for just institutional investors. There's whales that'll trade the options chain. But the proof is right here. Like, these are shares that they're buying. They're not buying calls and puts. You're talking about millions of shares, Like, here's one, 827 Vanguard Small Cap Investment Fund, 7 million shares of AMC. I get so tired of people talking about the options chain like it's the end all be all. And it's like, look, there's definitely like elements of that here. Like we saw some puts and calls here and there. Some of these are pretty big, but like, I don't know why people seem to think that there's going to be some kind of pattern of like all these institutions coming in and buying up calls all of a sudden to tell you where max pain is. Like, it just doesn't make any sense to me. And I'm like, just very obvious. Like, there are calls and puts on this stock. It's not that there's not, but the dominant price action is just buying and selling shares. It's not in the derivatives, like in terms of like how they're playing it. So I feel like there's a really silly kind of Bank of America might be a little bit. Well, they married it. See, they married a put with their shares. That's pretty common. So they bought 4 million shares and married some puts to it at the same time. Citadel, here's their call put. So their call put ratio is 5-2. Back on 814. So they're a little more bullish. And then they actually just bought 2 million shares straight up. So there's your Ken Griffin for you fans. California State Teachers Retirement. They bought AMC. It's funny. I'm not seeing any kind of, I don't know what this is, CSS nonsense. I don't know what this is. They're a little more heavy put side. This is a closed put position. Calls. They bought D.E. Shaw and Company, bought 3 million shares outright on 814. Or at least they have filed it on 814. They have a call position on 814. Here's what I'm seeing. I'm seeing a whole lot of August 14th and beyond. I mean, it seems like we were probably right. What happened on August 14th? The creek advancement. Oh, man. Might as well just be a hedge fund, I guess. So there's a lot of buy-in, or a lot of reported buy-in from here to current date. I mean, it doesn't necessarily mean much to you guys necessarily, because you're like, well, I don't really care because the price is going down. How could they be buying in, you know? I mean, telling you guys, it's like these operators, dude, they know how to play the game. They know how to make you think one thing and do another. It's just like magic, sleight of hand, you know? I'm just kind of looking to see if there's anything else I want to note, but I don't think there's anything else I really want to note. Vanguard is your biggest buyer. iShares Russell Midcap ETF, that's a big one. BlackRock apparently has like 20 million now too. I think Vanguard is more than likely your operator, but Vanguard and BlackRock are pretty much neck and neck when they're in a stock together. They tend to both play as operator, like as the EMU, the alpha operator. There's just a boat ton of share buying going on, especially around that 8/15 date. Yeah, Citadel has a not as great of a call to put ratio, but they actually have, this is technically married, so they see that they have on the same, almost the same number of put, so they have basically married the buy-in, and then they also bought a call on 8/14, or at least that's where it's filed. So they really are just covering their share position here with that put, which is a strategy you can do. LMR Partners, they have a huge call position, 814 million versus a 147,000 put. We don't know what they're buying, like they're buying long term or what. No idea. I don't suppose it matters too much because volatility's been pretty dead. So I don't think there's been much of a change. There's a ton of stuff on here. State Street Corp, I don't know what that is. They seem to be a really heavy buyer too. I saw that name come up more than once. Oh my gosh. How's that possible? 2 trillion? $2.2 trillion in holdings. What the nuts? That's a huge amount. Of money. I feel dumb. I feel like this is one I should know. But for some reason I don't. 300 million shares of Microsoft, 981 million shares of Nvidia. Yeah, so having AMC is like nothing for them, but what a huge portfolio. $2 trillion, that's crazy. I feel like I've seen that before, so I'm not, just trying to make note of that. That's wild, dude. There's a lot of activity. There's not that much activity leading up to it. August is pretty light until you can see like the numbers, they're not changing very much through about the 9th. And then right around the 12th and 13th, it's like a huge amount of activity and filings going up to now. So, yeah. What happened on the 9th? change of character. I wonder why there was a sudden increase in filings. You smug little turd, Booksy. You can't just say things. You gotta rub it in. What if you're wrong, dude? You can come back and bite you in the butt. You know it does that all the time. Yep. I think for me, it's more about the nature of it. When I look at stuff like this and I say things, it's hard to concretely have evidence that you're right. I mean, you can look at technical analysis all day, every day, and have theories and ideas. But to come back and say, look at something like the Fintel reports and see that there was a marked increase in activity and buying after that mark, this period of time right here, and to have suggested to you all that that's where that change of character happened, and not have really any stronger evidence than just the technical analysis and have people believe you is tough. I mean, it's a tough thing. And it's like, and believe yourself. I think just self-confidence has to be a big part of trading. So it is a challenge, you know, for me. And I think looking back at that, to see that and say like, all right, are we entering like the final results of a accumulation phase? I mean, I don't know for a fact, but I know that there seems to be a market increase in activity, a very obvious increase in filings from this point forward that are bull side. So why are we going down, Booksy? Again, operators, man. You have to understand, like, if people are buying in here and it's going down, like, they're getting better and better deals as it goes, you know? Like, they're getting better share prices. They're essentially buying backwards into the floor here. So for me, it's like, I think that makes more sense in some ways than them just buying while it's going up. If you're waiting for a markup, you probably buy on that last, what you perceive as like a last drop. If you have the information that you think you have. Again, it doesn't mean that everybody's right. And another thing that's kind of curious here is that level, because again, that's right around $5. And we talked about these little short positions, open, closing, yada, yada, yada. The only evidence we seem to have right now is that somewhere down here around the 440s is a short. All we know is that they definitely were holding a short position here. So we don't necessarily know what the value of that is. If it's still a profitable short position, it would be probably still profitable here. So we're close enough to it. If it's not profitable, then the only way they're going to get, you know, to a better position is if they drag the price, one particular institution out of 383, you know, would have to take the price down to 434. They don't have the power to do that. So they would have to be interpreting what the EMU is doing. You guys are like, why not? They could do it. I'm not saying they couldn't do it if they really wanted to throw money at it. But if you're staring in the face of people like Vanguard and BlackRock, I don't think a random hedge fund is going to be able to drive the price down without, let's just say, permission from the larger operators. This is not going to happen. So at this point, it's safe to at least some degree assume that they're not in as good of a position as they were. And all I can say to you, and I don't really understand why this filing is like this, but all I could say is that evidently the effective date of this is set backwards. And I think that might have to do with quarterly requirements, but set backwards at April 30th. I don't see this as a potentially really positive thing for them unless they had entered their short position like significantly higher, you know, than maybe perhaps 460s. But it seemed to me that 460s would definitely be a level of importance for them, considering they still had a massive short position here in the 440s up to 460s. Vanguard, on the other hand, has been loosening their grip. They've been actually exiting their short position. And considering that Vanguard is the maximum owner, I would say that does suggest that we might be right, that they were, to some degree, I'm not saying cued into it, but they probably knew. I mean, if most of Vanguard is long and they're just taking a simple hedge position, they're allowed to do that, I'm sure. I'm sure they do that all the time in their own. They do. We know they do that. They open and long call positions and put positions, and they'll open because they're hedging, they'll have like married puts with their shares as well, just to make sure if it doesn't go the way they want it to go, then they don't get screwed over. But what's interesting about it is there doesn't seem to be any other major short in this. So really, Vanguard is the only one that has taken advantage of this sideways in some ways to exit those positions. They've lightened their short position. There's less conviction in that short position if they're getting out of it. And that's over the last few months. Now, they haven't done enough to really warrant like a huge alarm. Like, they didn't completely exit their short position. And they may not, because they didn't do it over here when this thing pumped up. They didn't do it from February to, there was a lot that happened. They didn't exit from February to May. So there may be an ulterior motive there. Maybe they're using that short position for something else. And I'm sure we could figure out a lot of things that you could do with that, but I'm not doing that right now. So pretty cool, though, to see that potential change of character is the time where we had a lot of increase, I suppose. And there was a ton of them around the 14th and 15th specifically. And that, again, that could just be, there are a number of things, right, that we could derive from that. Like, we got information from the Fed on the 14th and 15th. Like, there was a lot of other things that happened there. So shouldn't all the calls and puts be in multiples of 100? No, because you can do I think you can do an order with a monetary value. Though I'm not 1,000% sure, I'd have to look. I think you can buy you can buy I want to buy 10 calls. That's going to be 100 times 10, right, or whatever. So that represents the amount of shares that you're trying to bargain with or whatnot. But there's a monetary value option, I believe, on most of those things. I know you can do that with shares, and it just depends on the company. If they allow you to buy a percentage of shares instead of whole shares, you could say, I want to spend this much money on these options. That might give you partial contracts. I'm not really sure. It could also be that that number is not quite indicative of like what we think it is. Because I was reading it thinking it probably represents the number of shares that the options contract represents. But it's hard to say, you know. I'd have to go in and look in detail and see if that's really what it's intending. This is not something I'm particularly great at, so I'm not an expert at reading filings. I'm just taking it at like the simplest base value. Like, hey, that's a lot, that's a little, okay. You know, like, I'm not really worried about the numbers specifically. But there's a couple things that, you know, I think you should definitely take from this. Number one is, yes, there are some institutions that are playing calls and puts, but what we've seen is that most of the institutions that are playing both are heavily leveraged in calls. Ratio-wise, that's evident. It doesn't have to be right about the numbers, but the ratios are there. Okay. It could be monetary value also that you're reading, like it says XYZ monetary, like $1 million in shares or something like. So that could change depending on the share price as well. That could be another explanation to that question we just had. Maybe they are in multiples of 100, but it wouldn't be like 100 times it'd be that whatever price you bought that contract at, you know what I mean? And then that gives you like a monetary value. And then that monetary value may be like outright, how many shares can you get for that monetary value? That could be what it is too, like right now, because that wouldn't be the same number. So I don't know. Again, I don't think it really matters that much, because I think at the end of the day, what matters is that ratio. And we're not seeing any put to call ratio where the puts are significantly higher. It's all been call ratio higher and or marrying puts with shares. So in some of those cases, it was a call order and then they had a put order that was married with purchase of shares. It was not that they were straddling or something. It was like the call order was like separate. So it's like, I'm going to buy calls and then I'm also going to buy shares and I'm going to marry some puts to those shares. So that's one thing. But very, very, very small percentage of those filings has to do with the options chain. And I think that's very significant because I've said it once, I've said it multiple times on here. I think the idea of max pain as a leading indicator is completely bogus. I think it represents a sentiment and that is generally retail driven. It's not something that institutions are using unless they're manipulating it at times to really show you where the price is going to go. And I don't think there's any evidence that that's the truth. So the idea that folks are saying like, hey, max pain's at 5, it's never going to run this week or whatever, I think that's accurate in terms of sentiment. I think that's an accurate representation of like, all right, so it's chopping. Maybe there is a heavy amount of calls and puts being bought by those very few institutions that are doing that. And that is causing it to kind of, balance out here or there. We don't know. We'd have to go dig through the options chain and see if we can find those orders. We really have no idea. That could be long, long, long option calls. We have no clue. Or they could be really short. No clue. But I think predominantly what I'm getting from that and looking through all the information is, again, what I've been told and what I've heard from people who do Wyckoff is that they will manipulate the options chain just as much as they manipulate shares, but that dominant trading happens with shares in the market, not with options. Options, a lot of people follow those things to follow like whales. That's like where it got popularity, is like you follow the big money. Yeah, sometimes you'll get those hits, but a lot of times it's not broadcasted. And 90, 95, 96% of those filings were just shares. They were not options contracts. So the idea that people have that the options chain is going to be this amazing like indicator of a big move, I'm not saying it can't be. There's definitely evidences that in the past, that's the case, where you can go back and see. I'm like losing my voice. Just a second. Where you can go back and see that. But at the same time, there's no evidence that there's really no evidence at all that anybody's playing options right now that are going to tell you what's going to happen this week. It just doesn't exist. The other big takeaway was just what we saw very clearly. Yes, a lot of these folks are loaning out their shares. That's not a mystery. But point is that when the stock runs, they want to be in the right position. And you've only got 3% of all the institutional ownerships that are exclusively owning short positions. Those that have disclosed. Okay? 93% are long. You've got Vanguard and BlackRock leading the charge with 30 million and 20 million shares respectively. And then you've got some other big players in there now that, like Mudrick, I think, who's like 24 million, and that Saskatchewan or whatever it was, like Susquehanna or whatever, I can't remember how to pronounce it. They seem really active on AMC, so I don't know. It doesn't really matter. They are shorting Booksy. Oh, are you joking? Are you saying they are shorting, Booksy? Are you saying they're shorting me? they're not shorting if they're opening long positions. That's not how it works. You can have both. And one of the things that I've thought about is the wall, and like some of those short positions or some of those long positions may be used as a wall. Like if you bought in low enough, anytime you sell, maybe at 530, for example, maybe anytime you push above there, you could sell. That could be a wall. That could be a way of kind of containing the price action. If I have 30 million shares or more, I'm probably not too worried about selling here and then buying again here. You know what I mean? All you got to do is instigate the sell-off. So it's not black and white. It's not like they're just buying and holding. They're actively, be more actively trading maybe than we would. And I think a lot of it is, again, like probably there's other strategies to create walls while you do other things, to just pin the stock for a while, just trade a range. But there's not really a lot of evidence here that this should be, at least from what we saw, that this should be in like a free fall or something. Yeah, and I don't want to get into like too much of the market mechanics behind some of the things that you could do. I think for us, it's it's not always clear. We won't always have the full story, and there's going to be things that happen that you think are one thing and they're really another thing. I don't pretend like that's really much of a mystery, but I do believe that the simplicity of it is there as well. Like, forget what we just read. I mean, what were we already thinking about? What was the concepts behind a lot of this stuff? That hasn't changed, in my opinion. So regardless of whether you think that that's legitimate or not, it's like it didn't really do much to discredit anything that I've said or discredit any kind of the TA that we've already worked on. And that's, to me, is kind of the critical point. If they had been increasing their short positions, I would be like, oh, okay, well, somebody really thinks this thing's going down. And that's not what we found. They've been exiting short positions. Maybe they're disguising some of those things, maybe not. So one big short operator has been getting out of their short positions. Another big short operator has not seemed to budge. And that's it. We don't really have much else. We'll see what happens. What about the price action, Mr. TA? We'll see. So on the RSI, and this is a shorter time frame, it's a 30-minute time frame. It looks like an M cross, but you can tell that even though this is rising, we really haven't gotten that breakout yet. And one of the things that we need to do to break out here is get the jump over the creek on the outer end. And that's after getting a support right here at 474. So I have a little marker drawn that this is basically representative of what needs to happen to get a big jump. I'm going to take a break early today. I'm not going to go on long like I always do, and then basically only have an hour. I want to take a break early because if this breaks out, I want to be able to come back later. And I haven't been doing that lately because we've been having kind of slumps at the end of the day and nothing really exciting happening. But it's in a position right now where it potentially could just find a floor here and move back up. And this is what we wanted. I mean, we talked about a spring yesterday. It was like, hey, if we go down and we spring, we'll create a floor and we'll drop and then we'll recover that floor. And we did. We came down and created a floor at 474. We dropped. We went to the low. Booksy said he didn't think it was going to go super below 465. Booksy's not always right, But I made a strong enough argument in my own opinion that at least for me, it was like a confidence thing. Like I feel pretty confident that's where it needs to be. Maybe we go lower, but it would have to break here. So we're still looking at maybe we break 460s is what I mean. So you go below that because that would make sense too for liquidity reasons. But we're still above it right now. So like for now, there's nothing really decided. We're just waiting to see if we can get the push. Y'all, if it pushes here, it should move pretty quickly back up to like maybe the 490s. We might actually get to approach this other creek today. It's very possible. And if it doesn't push, it could maybe chop here at 474, be stuck a little bit today, and then tomorrow would be like the cliffhanger reveal. That happens and probably won't come back because we'll have to wait till tomorrow anyways. That could be an either or situation. So if it just sits here and doesn't do anything and closes at 474 or something, there's no solution there. It hasn't given you an answer. It looks to me like a jump. And then if that jump were to continue, you'd continue to push out here. And if it doesn't continue, I think we're going to go back down and test the 465 area again. And it could be like a longer ranging type deal. Could be quite boring. And it doesn't have to be super dramatic at the end. It could be a really simple little spring at like 460, or it could be something really deep. But I think that we're already at that point where I'm starting to think more and more and more about that return. And that's very positive. We should be in good spirits about that. We really should. I talked a little bit about MPW. I'm just not super convinced just yet. Really need to see it move above like that 480s level and break out here. So we're just not there yet. GME, same deal. Kind of like chopping right now at a level where it could go one of two ways always. We always know that. But just based on the way this is set up, I had thought maybe we would come down as low as 2250 or even 2190s if it came down later. It's kind of there, it's kind of like right above. It's at 2272 low right here. I think it's right above that mark. It's pretty close to what I might have thought. So I wouldn't be surprised if it kept going down a bit. It looks a little like a wedge, a little like a head and shoulder. It's probably both. So if you're like, it's a wedge, it's a head and shoulder. Yeah, you're probably right. It's probably both, because normally a head and shoulder like would break out of the trend, and it did. If the neckline breaks, it could kind of softly go down, but it may very well be a wedging action as well. Point is, where is it maybe pointing? Maybe again 2240s. Not a huge deal. We'll see what happens as the day goes on. IWM. This is the one I probably spent the least time on this morning. I was just talking about some generalized things, but I think that in general, like to me, it seems like there's a definite potential for a setup into a big run late September. This move right now could go as low as 207 based on just a whip around value here. I think it's very possible. And we could basically kind of chill out, crush all the indicators going into FOMC in a couple weeks and be in a position of strength potentially here to sort of take off. But I don't know for sure. And if it goes sideways, there might be more inclination to suggest it could drop at the last minute. I would prefer to go ahead and chop down if we could and get down to 207. I think that would be better for us going into mid-September, but we're not there yet. So, big day. Big day. Doesn't seem like a big day, but that's part of the game plan here. I think it's important. Important couple of days here for sure. Yeah, I just talked about that Einstein at length. So, while I do agree that your market makers are generally looking at that and giving us that kind of push and pull, there's really no evidence that larger institutions give a crap about Max Payne. I just don't think they care. Unless maybe they have something to like win or lose at that particular week. But I think it's mostly your sellers, call sellers, and whatnot. So, yeah, I mean, we just spent like an hour and a half looking at 13F filings, and out of like 70 of the more recent ones, like maybe 3 or 4 to 5 or 6 are actually call or put positions. Most of the trading is being done with shares. So, if the conclusion is that we can just rinse and repeat it every week and we don't have to pay attention, that's not really wisdom to me. That's just a way of kind of saying, like, I understand the pattern, and I get that. We all kind of generally understand that pattern. Like, I know I'm talking down to Max Payne. It's just a concept of sentiment for me and for hedging in terms of like what the market maker is responsible for. It matters, but it doesn't really play any consequence to me in the breaking out of a range. It has nothing to do with it. Because in the end, it's not going to matter. Max Payne has never mattered for a breakout. I'm just going to say it. I don't care. We can argue about that, but I don't think it's ever mattered. Ever. I just don't think it has. It makes no difference. Like, maybe we could argue that, hey, no, it does because the options chain and OPEX and all this other stuff. And leading into these runs, you have to have, things. I mean, look, the options chain matters, but the number that you see in Max Payne week to week that fluctuates midweek based on what's going on, that changes up to the very day, I don't think it matters. Like, when we look at the historical nature of breakouts, like, as an indicator, is it a good indicator? No. As a rule of sentiment, like, where are you coasting right now? Where are we maybe expecting the stock price to maybe be? I think it's a decent indicator of sentiment. I think it works pretty well week to week to just kind of get a feel for what everyone else is thinking in like the retail groups. If nobody's expecting it to break out, they're going to be building their options around the range, which is currently wrapping around 485, but 485 is a weird number, so we're just going to pick 5. But the concept of like it being broadcasted is clearly debunked. It's just not true. Max Payne isn't going to suddenly, I mean, maybe if it started running up and breaking out, maybe it would suddenly change to like 550 or something. But it's not going to like tell you in advance. It's definitely not a leading indication ever. I cannot stress that enough. And I just don't know why people, and I know it's not just you, Einstein, but I just don't know why people continue to tell me what Max Payne is. Like, I don't even need to know. I know where it is. I know where we're chopping. I almost am positive it's going to be at 5 every week, and it has been forever. So why would we even question it? That's not really helpful. But the idea of it like continuing indefinitely doesn't make any sense. So like we're eventually going to have to leave up or down. And I don't think Max Payne is going to tell us that. So it's sort of like a moot point, I suppose, to say like, Max Payne's at 5 again. Guess we're going to be at 5. Well, yeah, of course it's a possibility. We're going to be at 5. Every week is a possibility you're going to be at 5. If the price action is flat for months at 5, every week is a possibility. But the idea of like, that should somehow tell us that we're not going to potentially break out, I don't know if I agree with that. It'll be a Monday. big Monday move or a big Wednesday move, and it suddenly will shift max pain. Max pain will be at 5. We'll open the week at 5 on Monday, for example. And then max pain will still be at 5. And then all those calls will come in and puts will come in going into Tuesday's price action. And by Wednesday, you'll kind of have an idea. Well, if Monday and Tuesday are big explosive days, you're going to have people buying options thinking, where is this going to end this week? Right? Playing short-term contracts. But you're going to have people that way overestimate it. They see the push up and they think it's going to go to 10. And you're going to have people that way underestimate it. They're going to see the push up and say, no, it's going to come back down. And they're going to say, 550 or whatever. And we don't know, but it's like, it's a reactive thing. It's like people are reacting to the price movement, and that's what changes max pain. So it doesn't make sense to me that everybody's going to be, all of a sudden Monday we're going to wake up and we're going to see a billion call options for $10. And, this just never happens. And Vanguard bought millions of shares at the bottom on May 10th. They didn't buy millions of call options, they're not broadcasting it through the options chain. So it just doesn't make sense. I don't know. It's not about whether or not max pain is good or right or accurate. I don't think it's ever that bad of an indication of where you're going to end up. But I do think that it becomes and it has for a lot of people, it's become like a way of coping. Like we don't like the price, so we have a pattern that we can fall back on and say, well, at least I'll be right because it'll be a max pain. It's easier, helps us to cope with the fact that we're not moving. We can look at something like max pain and be right about it for weeks, and it's like, yeah, you can. You are right, until you're not. And then it's like, but you got it. That's not really doing the TA. That's not really doing the analysis, in my opinion. I just don't think it will help you with a breakout. So, easy to say, harder to do, right? Easy to say things like that, harder to actually get it right and do it right. We're hoping that this time we're right because of the setup. So, I'm going to leave with that. And if we do get a break above today, I will be back. If we come back above this particular creek right here, this yellow guy coming down, I will be back today. No question in my mind. I'll be back. But if we don't get a break above this, probably won't be back because the rest of the price action could be very stagnant, like basically getting stuck beneath 475 all week. Yeah, I know. I will be honest with you. I've been acting very defensive about max pain, mostly not because of you, but because people that I've never heard of or people that are kind of quick to point out my own, shortcomings. In here specifically, there's a few names that pop up a lot. They tend to be the ones that kind of throw max pain at me like it's the answer and you're wasting your time kind of thing. Maybe that's a little bit of mind reading on my part. Maybe that's a little bit of a thinking error on my part. Like they may not be intending to do that, but it's starting to come across that way because like people say it in kind of a quick like, yeah, well, max pain's at 5, so that's where we're going to be. I see that as a bit of a smokescreen, like a way of kind of shutting down a conversation. And then specifically just now, I had just talked about it because we went through the Fintel reports and I made an observation. Well, I really wasn't trying to do that, but I just made an observation. There really wasn't a lot of evidence that max pain played any role. Like that calls and options really haven't been active at all. So it's like all of it's been basically buying and selling of shares. So institutions, that's where they dominate. They don't dominate through the options chain, though they may use it. So you did hit a nerve, but it really was more of just because of a few different things. It wasn't really just you. I just tell you that not so that people could take advantage of my vulnerabilities, but there are some things that just kind of like bug me, you know, when people just say it over and over again. I'll get to a place where I won't care as much. But there are folks on here that are just genuinely like, I just want to learn, and I just want to let you guys know, like Max Payne is, again, like you just said it too. It's sort of an indication of a neutral balance. It's not going to give you the answer that you're looking for. I guess is what I'm trying to say. It may give you like, hey, if nothing happens, this is where we might be. That's fine. Neutrality, right? Where are we neutral? Like you said, that doesn't really give you the timing of a breakout. It's just not going to do that. So I would caution folks that use Max Payne to not use that as a leading indicator of what may happen. Sometimes will it be a slightly leading indicator? Yeah, but that doesn't mean it's a leading indicator. I don't know if that makes sense. It's like anything like RSI or whatever. These aren't leading indicators, but they can be self-fulfilling prophecies at times. And every now and then, yeah, like they can give you a picture of something that might happen. Like right now we have a divergence on RSI, a pretty decent one on these two bottoms. That divergence could be squashed. So that's the thing, is like right now it's divergent, but all it takes is a big sell down, and it would be a lot. It would take a lot to drive this back through, but it probably will stay divergent in this case. But sometimes that sell down is enough to like remove the divergence. And it's like, well, what happened? The bottoms were divergent. This indicator can give you a hint at what's going on with its relative strength index, right? So like the way the formulas are derived, it can give you a hint that there could be a turn coming. And technical analysts use them, and then you can trade them. Like it just happened on GME and it ran 24% on this kind of a bullish divergence. But it does happen sometimes where you get that bullish divergence and then there's a second move or a third move and it erases it. It's gone. And time frame matters too. So it's like it could help, but it's not necessarily going to help. And I don't think Max Payne right now is bad. Thinking that the price could end up back near 5, it's not unreasonable. You could trade based on it if you really wanted to, but what it doesn't do is it doesn't tell you that where the breakout could be. It doesn't really tell you where those confirmations are, how to read them. It doesn't say anything about that. So right now it's just kind of showing us where middle liquidity is. And it's been doing that for weeks and weeks and weeks. So I think we're going to see it move pretty quick here in the next couple weeks, but I know that we got to get through these first steps. So, all right, I said I was going to ramble on again. I always do this. So I apologize if I came off as a little strong, Einstein. I didn't mean to. It was a reactive kind of comment on my part. If we break out, I will be back. If we don't, we sit flat or we go down, I probably won't be back. Okay? So unless something dramatic happens, right, I wouldn't be back. But I would love to come back this afternoon if it breaks out so we can talk about that and see if we can pick up on where the supports are. All right? Okay. Guys, have a good lunch. Enjoy your lunch and your time. It's been raining where I am. It hasn't rained in like 2 months, so I'm really excited. It's been raining. Makes me really sleepy though. So anyways, enjoy it. And we'll see you very soon.